30th of June. A very special day indeed. Good morning, Angeline.
Good morning. It's bright, breezy, sunny and hot, hot, hot here in London, and good to see all of you. There's a new sound in my ear.
There is a new sound. Have we got music still going on?
It's still going on, yes.
Ah, of course, of course. Is that because they've cancelled the attack on Iran? What's coming up on today's show? Let's have a quick look. We've got myself and Angeline through until 8:15.
It's going to be a cracker because we got Bat and Tom Sosnoff back with us on the show.
Well, first you've got Isar though.
Yeah.
So 8:15, Isar coming in to join Angeline for the week ahead. And then between 8:35 and 9:30, we have got the one, the only, Tony Batista and Tom Sosnoff joining us this very morning. We all went out for dinner last night for a warm-up for tonight's big event. And a warm-up it certainly was. 9:45, we got Nick Batista as well. That is a video interview that I did with him. So that's Tony's son, of course. And you can see if you can spot the difference between Nick Batista 20 years after his father.
I have to say they both have the blessed with Mediterranean skin.
Yes.
You know, they both look very, very youthful. I'm very jealous.
Now, Ange, where did we go last night?
So we went to Brat in Hackney, which was unbelievable, wasn't it? The food was incredible. We had the steak and we had like crabs as well. Mm-hmm. Did you delve into the crabs or was it a bit too messy for you?
No, I tried. It was a full crab. She'll actually we'll get the pictures up for you in a minute because I've got them on the phone.
Too as well.
Oh, have you?
Yeah.
Go on,
you want to see them? So this is zooming in on the Twitter site whilst Rich is getting his up. It was quite something. The food is incredible. There's Tom Sosnoff himself there. We're trying to cool down with these beers. And then look at this happy face there.
Tricky night for me.
There's Liz and also, of course, the Stella Brittany, who is head of events at Tasty there. She's running the show and keeping these boys in check in London and Milan.
Is that on your Twitter, is it?
Yes.
Oh,
yeah. And
then
yeah. And here is Sharon and Tom as well. Sharon leading the charge on the EMEA front there. Yeah, it's look, producer Phil. And Sophie, is this the first time our viewer friends have seen Sophie?
Indeed.
Sophie, if you're watching, call out there. I saw you. You were brave. You tried to break into that crab. So did I. Tom as well. Well worth it. So that was last night.
Speaking of which, there is the crab. You can see why we had a little bit of tricky job in attacking that. Yes, that is the head. The head comes along with some liquid. And then the steak. Oh, the steak was good. It was
good, right? Oh, you got a picture. That's great.
Yeah, we had two of those.
I was too busy eating, so I didn't get a picture.
Some fish. We're feeding the 5,000 there.
Yeah, I didn't get any either. You hogged it, didn't you?
I'm pretty sure producer Phil did get some.
I did not get one either. I just saw it and then it disappeared.
Okay, so when I said feed the 5,000, then it was mainly feeding me.
Yeah.
And then there he is. The man that you are hopefully coming along to see this evening. Sosnoff was eyeing up the bread at the end of the table. I think that was his favourite, the courgette bread.
Yeah, it was very good. We were very happy that there were two celiacs on the table, so they didn't touch the bread more for us. Lots of questions coming through because on my Twitter I had tons of these questions, and also the studio's asking, "Where's Bat?" So cupcake trader messaged overnight to say, did he go and do some sightseeing and left you guys to it? Someone else said, was Bat, gone to a sauna or something?
He went all the way to Harrods. His son is a big fan of caviar.
Oh.
So
So
they booked, yeah, a 15-year-old, a big fan of caviar, and they booked a lunch at Harrods at the caviar restaurant,
Yes, you do.
only to get there and find out that they closed it a month ago.
Oh no!
So his poor son had been looking forward to this. So they made up for it at dinner last night. They got stuck into the meat at the end of the table. So that's right. So we had a good warm up last night. There was no air con. So
No, and there was like a full-on barbecue thing. But guys, if you love grilled meat and you love that sort of food, Brat in Hackney was incredible. Lots of people on the chat this morning. Some of them asking whether you've got a trim. Did you get a trim?
I have indeed.
Ahead of
That's how special occasion it is.
Yeah, London event tonight and Milan. Please tell us on the chat, how many of you are we going to see tonight? That would be great.
Yeah, go on. Who's coming along? And what are you wearing? So we recognise you. And we run the other direction.
Please don't tap me like last year. I think it was Julian, and tap me on the back and said, "Don't worry, Ange, I'm not Monkey Man."
Yes.
Shock of my life.
Good morning to Philly Financial there joining us. Give us an update, Philly, on what your thoughts are of this market at the moment. Steve Davies, Andrew McKelvey saying the Bitcoin Treasury bandwagon keeps rolling along. Certainly does. 3 companies making announcements this morning. Helium has raised 4 million sterling. And yeah, on it goes. Away from the numbers, Neil's in this evening.
Oh, fantastic, Neil.
I'll have the beer ready for you.
Come and say hello. That'd be great. I will be there welcoming everyone. So if you're there early, just look out for me as well.
That's right. So the doors open at 5, and then all the action opens at 6. But the bar will be open from 5 with my card behind it, which you're very welcome to help yourself to some tap water. I mean, sorry, vino. Come and have a vino with the boys.
So it'd be molto interessante.
Absolutely.
Can we say it one more time?
But we need you to come along and drink a lot because UK retail sales today, my gosh, we're about to take a look at those in overnight action. I mean, these were terrible. Absolutely shocking. Let's have a look at the economic data that the guys are about to put up, and you'll see.
Here we go.
Not only did we have Japanese inflation overnight, but we had these UK retail sales coming month on month down 2.7%. That was against expected down 0.5. And then the year-on-year number, a negative 1.3 versus plus 1.7 expected. These are atrocious. Do not underestimate how bad these actually are. And it was a big drop in food sales. You had, I think, down 5% in food. And then also there was a slowdown in footfall. So the clothing retailers also saying that they've lost out. So that's moved the pound. The pound we've seen.
I've got the screen up if you want to take it. It's you know, these figures to me, Rich, just is another nail in the coffin for retailers and those that don't have a strong online offering. We've already seen, you know, the likes of Poundland, Marks and Spencer's, Boots all say they're, you know, shuttering shops, and this is yet another sign that you know, the UK economy and the consumers are you know, really suffering here.
But the share prices aren't. That's the
share
thing.
prices aren't, yeah.
Tesco just going above £4 for the first time. As you can see there, £4. So, you know, this is going to be a bit of a shock to the system. Nobody expected numbers to be this bad.
Yeah, so that's why I'm saying the ones that don't have a strong online offering, Tesco has a strong online offering, right? Those that were slow to the mark, you know, those that are like, you know, M&S struggling to still kind of give another way for customers to buy their stuff is going to really struggle. You know, and you're right there in saying that, you know, retailers, there is a mixed landscape. Tesco, for one, beat expectations for first quarter sales. But all these retailers, the one thing that binds them together is they're still saying it's dire out there, right? It's intensely competitive. And most people are not buying the expensive, not needed items. They're sticking to groceries.
Well, apparently it's alcohol and cigarettes. So that's your real discretion. When you're in there and you look at that wine aisle and you see,
Speaking from experience.
Absolutely. It is. The rest of your shop is what, 30, 35, 40 quid? And then do you stick a bottle of wine on at the end or not? I've never bought a pack of cigarettes, but I imagine they're what, 12 quid, 15 quid, something
It's
like
really expensive, yeah. Probably. I don't know how anyone can afford to smoke. But maybe, if things get really bad, there's always we talked about this with Matt Arbour, saying that he was wondering whether that's why sin stocks might be back in vogue. Because in, bad times, you want some release, right?
Yeah, not today, though, by the looks of these figures. So, yeah, let's two-tier Kia straight in there. Well, you voted for Labour. This is what you get. Terrible data. So, yeah, but the question, have we suddenly hit the wall, or is it something to do with the 2 bank holidays in May? Is it something to do with the very changeable weather that we had? So, this is going to be interesting. But if this is what we've been waiting for all along, a sudden but marked shift in consumer behaviour, then it can't be that much of a surprise.
Do you think, Rich, we might need another print? Because the GfK one for the month of June, the consumer sentiment figure there was actually quite positive. So, do we need another print to kind of give us a bit more clarity?
Yeah, I think we'll hear more, won't we? It's a shame. John Lewis used to do monthly numbers, and John Lewis would be a great barometer.
Yeah.
But yeah.
Away from the numbers, saying Ange, Club Card helps Tesco even on the wine. So yeah, I do have a Club Card.
I do as well.
Yeah.
Great offers.
Yeah, and I get really sucked in. I have a hack. I know the different Tesco shops that have the biggest discounts on that Club Card. So morning team, Abby Fine chiming in. I'll miss you all tonight. My flights were cancelled.
Shame.
Where are you coming from, Abby Fine? Let us know. Hope you're not in the Middle East.
Yeah, you'll be in Israel.
Oh.
Shame. Right. I would also have a look at Next here, because Next has been a great performer recently. So we're at around the 124 level. Not quite as toppy as Tesco's is. But what else have we got in the old the basket of UK retail there?
What's M&S doing?
M&S 366, a little bit boring, mid-range. JD Sports 73.60, no let up for JD Sports there. This isn't going to help them either. But Sainsbury's, let's have a look at where Sainsbury's is relative. Yeah, pretty much at the highs as well. Having started May at £2.60, we're up at £2.86. So, yeah, going to be a very interesting open. Bit of action on the open today.
Yeah, and we'll have Bat as well on with me for the all sessions, which is going to be really exciting. One thing to note with retail, M&S and Morrison's as well, just keep an eye on those because, of course, they're still struggling under that cyber attack disruption. So they're still washing through.
Yeah. Right. So that was our meal last night that we've shown you with a fantastic photo that I was looking very happy.
I'd like to go back to that place, actually. And sit outside because inside was just a bit too hot, wasn't it?
Very much so. But it did help. The beers went down all the better. Right, let's have a look at the front page of the Financial Times there. There is a very good article on the implosion of Iran's no war, no peace strategy. So that is a long piece, and it's also got a nice map in there, where you've got the comparison between 2019 and 2025. So obviously a hugely depreciated power that Iran has had over that 6 years with, well, you've had the change, obviously, in Syria, the collapse of Assad's government regime, and then also the assassination of a lot of the leaders. So, yeah, greatly.
I find the US comments the most interesting in terms of timeline. Did that kind of like send your antenna going, the 2 weeks, right? It's very vague.
He's realised that he was
2 weeks.
absolutely full of shit.
Let's push it out there. 2 weeks. It could start anytime now, anytime 2 weeks. Then that time frame also ties in at the end of the 2 weeks with Independence Day, right? July 4th.
Yeah.
Is this an opportunity for him to kind of like do something in between and say, oh, this has been a victorious win? Or is it opening the door so that in 2 weeks, there's some sort of pressure for diplomatic
The 2 weeks is completely because he went way ahead of himself.
Yeah.
On Monday.
Overdid it, yeah.
Completely came up with, right, unconditional surrender that was never going to happen, and realised he had talked himself into starting World War III when he had absolutely nothing to back it up.
Yeah.
And they had no plan for regime change and no idea of the consequences that would happen. So it's, you can do it with tariffs, but you can't do it with, pressing the red button on something like that.
So that's why, Rich, I think this is a backing up strategy. I'm going to give, what he's actually saying is I'm going to give everyone else 2 weeks to try and find, some way of dealing with this whilst I tiptoe out of the room. Yes, it sounds like a poll, Phil. Taco poll? I hear a taco poll coming up. Well, is Trump's, is Trump going to tackle on the Middle East or, what do you think the next time?
Oh, he just did.
And the 2 week time frame, I mean, do we have that in there as to whether there will there be, what will happen at the end of, thank you, Terence, what will happen at the end of 2 weeks? Intervention, no intervention? Yeah, only time will tell. Meanwhile, let's have a look at some of the things that could create some volatility here. Oil prices, obviously Brent's top, let's get that up here. Let's take a look at WTI, adding that to my workspace. Yeah, looking at the slow climb up, we are starting to see a bit of consolidation there. This is the daily chart, people, and it's around 73 there, dollars a barrel. Let's have a look at Brent crude as well, because Brent has topped at around $75 for the first time since January. No signs of disruption to output at the moment. Iran, of course, produces some 3.3 million barrels a day and exports around half that.
I'm surprised that's not come off more, actually. We've actually had gold come off more than we have oil. So, that's an interesting one.
Maybe they're all waiting for Friday, later today, because, foreign ministers are set to meet their Iranian counterparts later today.
The Europeans, yes. So German, French and UK foreign ministers meeting the Iranian foreign minister to try and hash something out. I'm not sure what exactly can be agreed there. That the attempt from Iran is to allow the IEAE back into do their little surveys and just check that, okay, that nuclear is only enriched to 66%. That's okay.
Yeah.
But we're past that, aren't we?
Yeah, I think we are past that. The other big thing is NATO. So they're looking at big spending plans. A lot of mood music out there saying that this is in the hope that to keep the alliance together and to keep Trump happy. So looking out for that as well. Expectation is NATO will boost its current spending plan 2% of GDP on traditional defense to 3.5%.
Great point from Poppy. Poppy saying everybody's long of gold and they're short of oil. So that's why you're seeing gold come off today more than you are oil. That's yeah, very good point on the the flows.
Poppy, I love that you left out L as well. Ong of gold. Here we are whacking out gold for you. Not quite there yet, but still edging. Let's get a look at the daily for you. And there we are. It is still making that slow climb. Actually, it's got a pivotal point now. We are touching the end of that line. I'm trying to see whether it'll bounce off, but 3,500 in view there for gold.
Right, let's have a look at the futures, how they set you off. Because, of course, the US was closed last night. We had moved down in futures, and then we've had a subsequent bounce. So it's, you know, the US today will open pretty much roughly unchanged where we are at the moment. So remember, that 43 basis points is just the futures move. FTSE looking up 40 basis points. That is real. Germany 65. We've covered oil, gold 33.45, even lower than where it was post-Fed.
Look at volatility. It's still around the 20 handle, right? So market's still relatively calm.
Yeah, there's still concern. Considering you've just had a 2-week hiatus, then yeah, it's interesting. Because that puts us into the new contract, of course. Because now we'll go through June expiry without anything happening, in theory.
Bitcoin finally gaining a bit of momentum there, up 410 to a bit.
It's stuck there, isn't it?
No,
It's stuck
it's
in that
really
105,000.
Yeah.
And
been a good
then,
cycle.
yeah, you pound dollar had a dip yesterday. And it was bouncing back today, but it has come off on those retail sales. And then you've got high-grade copper at 480, kind of stuck there as well, isn't it? So there's a lot of wait and sees going on.
Bit meh.
A bit meh. And then, of course, we are we're on expiry day. We are on triple witching. So if your screen goes a bit funny at 10:10 on your UK stocks, then that is why.
Yeah, we're off to the chart. Guess the stock very soon, but slam the like and subscribe button whilst we're at it, because if you like the show, please spread the word, like and subscribe, because then we can do more of this stuff for you, have more events, and do a lot more content that you find useful. The stock is coming up. Guess the stock. Just tell us. Thank you, Producer Phil. It's a US stock. It's on CFD this time. Thank you. You anticipated my next question.
It's on CFD and it's a UK stock.
US.
US. Right, hang on. Let's see if we can guess it before he even puts it up. What does your gut tell you, Ange?
I'm going to be in his head. I'm going to be in his head.
Snapchat. Something like Boeing.
Ooh.
A Boeing.
What did Producer Phil talk about recently?
He likes his tech.
Yeah.
What will the situation be in the Middle East in 2 weeks' time? Only time will tell. 42%. The first time it's won a poll, I think.
Phil, were you in there answering your own poll so that only time will tell?
And then Friar Tuck. Yeah, that is a good point, actually. You know, is this 2 weeks just a chance to organise what the new regime would look like, what America wants to get its puppets in there, and see, you know, what control it will have over potential democracy in the future.
Yeah, because you can't really get rid of rid of rulers if there's nothing to take its place.
Well, that's what he's realised in the last 48 hours.
Oops. Okay, I'm going to guess the US stock. I'm trying to read Producer Phil's mind. Netflix.
Right, you go Netflix. I'll go Abercrombie and Fitch. Did you get it?
Parky, straight off the mark there. Woo!
Beat me. I did not get that one.
Beat me too. I guess Netflix. And yeah, I didn't get. That was before we threw up the chart, right? What did you guess? You guessed Boeing. Before you threw up the chart. We're trying to read producer Phil's mind.
Intel. Intel if it was $21, not 2,100. Right, we're almost there. We got 5 seconds. Yeah. Andrew's about to ring the bell and open the London Stock Exchange. This morning, we are looking a little bit directly onto the retailers. So it's not my usual screen because I think the retailers are going to be where it's at this morning. I would like to sell some Tesco's. Right, we're out of some Tesco's there at 401.40. Next would be potential as well. Let's see if Sainsbury's gets hit.
Sainsbury's only down 0.2% at the moment, right? So not a huge amount there. What did you say, Phil? Which is moving? Let's take a look. Whilst Rich is doing that, we've got also Wizz Air in focus. Wizz Air, I believe, Phil, is up a quarter at the moment, 0.25% there. Mine's saying a different thing.
Right, so next up on the day, so I've had a little nibble on the short side at Next. I've had a little nibble on the short side on Tesco's. With those dreadful UK retail sales. I'm actually really surprised Tesco's is up on the day. And then, yeah, we've got Sainsbury's not really moving either. So just completely ignoring these figures. Marks and Spencer's, you've got down 70 basis points. And yeah, the mighty Greg's up 30. So let's go to our usual screen across in the UK and see what is the big movers. BP giving up all those gains from yesterday on the drop in oil. So let's get to that. Where are we?
Also, Rolls-Royce, securing deals for 142 aircraft engines there. Andrew McKilvey, if you're trading that space, check that out. Also, Hiscox raised to overweight at Barclays. Price target there, 1,400.
Right, but your story of the day is really BP and Shell coming off down 1.2, 1.5% on the back of that oil move. Who are the winners? The winners are Wetherspoons. That's maybe just a little bit of a wide spread on that, marking it up. I'd be surprised if on the back of the retail sales, the Wetherspoons are up 3. IAG, obviously a little bit of a relaxation in the troubles in the Middle East. That one responding up 2%, as is Carnival, as is EasyJet.
Also, don't forget, JD Wetherspoon and M&S. Well, M&S was slightly lower earlier on, but it does not have a good online offering, as we can tell from the cyber attacks and everything else as well. But the EasyJets coming back after being pounded earlier on in the week. Also checking out. If your screen might stop moving. Some of the names, like the banking names, Barclays, Lloyds as well, heading higher. HSBC also heading higher this session.
Miners doing all right. Anglo-American at 2030. That probably takes us on a chance to look at commodity world. What are we seeing in commodities? Let's go to our screen. Now, where's that gone on our commodity page?
If you want to come to my page, I've got the commodities up. We've got WTI down 0.5% there. We've got Brent crude as well, down almost 8%. Looking like a similar picture. Gold down 0.75% there, and silver.
Yeah, silver's getting smashed, isn't it?
Yeah.
And platinum as well. Platinum has been the real performer over the past 2 weeks, but it is coming down along with the rest.
I hear Cam saying buy the dip. Just getting you across some of the AIM movers as well. We have quite a few prints out today on seed innovation. I think, is it you, Andrew, that said you look at this sometime? We're seeing that finals the portfolio value to about £8 million. It's got 3.4 million in cash. But really, let's take a look across the indices as a whole. It's looking like it's risk on at the moment.
Right, over in Europe, what's happening in Europa? We're seeing a bit of relief also in the airlines. Air France and Lufthansa up 1.5–2%. And then Ryanair up 1.4 as well. SocGen up 1.3 and ASML up 1.2. So on the negative side, who is losing ground in Europe? It's just those oil names. That's the only negative performers on the day. So yeah, clearly a lot of relief here on this Friday.
Yeah, which is great. It teases up nicely for tonight's event. The interesting thing too is a lot of the European movers are actually very volatile. Eutelsat, which was up around 5% after the French government was set to become its biggest shareholder, now losing a lot of that gain. TUI, I'm going to hit that up for you. TUI is up 3.8% there, after Barclays raised it to overweight from underweight. And we are also seeing, let's have a look at, if you're into the Heidelberger.
It's a Heidelberg.
I can't say that. Yes, with Rahel.
In Heidelberg, yeah.
Yes, I can't say the second word. You might be brave enough to. Druckmaschinen?
Yeah.
Drum roll.
Druckmaschinen.
There we are. Yes, Heidelberger Druckmaschinen shares up more than, now just under 3%, but it was higher, as high as 3.2% earlier on when we opened.
Now we've got Berkeley Group down 7. What is going on here? Set of numbers that we missed this morning.
Well,
clearly.
Berkeley did have a full year operating profit of 500 million. That was slightly beating the street there. So 500 million full year operating profit. Right.
So, yeah, getting absolutely smashed, down 6% Berkeley Group. So there you go, pre-tax profit you've got on your screens there. The guidance for 27 likely to be similar to full year 26. And yeah, long-term target of return on equity above 15%. But not good enough, clearly. Where are they on the charts, Angeline? Let's have a look at this one. It has been steady around that £42 level. But this really taken it.
I wonder if it's something to do with the fact that they've named the current finance chief, Mr. Stern, as its new CEO, succeeding Rob Perns.
Oof, down 8.5 now.
I know, right?
Andrew McKelvey, what do you think of that one? Is that Berkeley Group one that you look at? Let us know in the chat there. And we'll see if we've got a comment from our friends over at Numis as well.
Just catching you up on the situation in the Middle East as well, and how it could potentially affect the airlines, especially the long-haul ones. Britain has updated its travel guidance to Lebanon, warning that those traveling to and from Beirut's airport may face disruptions. As we know from, was it Avi Fine, who now can't make tonight's event in London.
Yeah. Right, okay, so we've got Numis comment on Berkeley Group is the value of sales reservations taken in the period rose 5% with improving momentum as the year progressed. However, this still leaves reservations 30% lower than in full year 23. Consequently, the cash due on forward sales is down 18%. And that is the problem there. So Berkeley Group now down 8% on the back of those numbers. That's the worst performer today in the FTSE. You can see the rest there. We've got still BP down 1, Shell down 1, and some of the other home names there down 1% as well. Marks and Spencer's down 1% on those dreadful retail sales in the UK. Why did the consumer hit a wall in May?
Yeah, and it's interesting as well with the oil stocks there. They are down early this session. But just bear in mind that, a lot of houses, especially Citigroup as well, has upgraded European energy stocks to neutral from underweight amid those rising geopolitical tensions.
Andrew McKelvey saying he doesn't follow Berkeley just as well because that's probably helped him dodge a bullet. We had a question earlier. SWC, how far do we think it can go? Well, I certainly didn't think it would be above £4. So that is now £4.20. Our good friends over at Smarter Web, having gone from 30 pence when Andrew Webley was on the show with us to £4.20 in about 2 months, less than 2 months now, 7 weeks ago. The stock has been absolutely monstrous, going from worth £40 million to over 1 billion market cap. Our director in the box still has them.
Not mentioning any names. He's doing the victory lap in there.
Yeah, very proud of himself. He got in at 30 pence and he's kept them all the way. And he says he's never selling.
Yeah. So just a quick note, we got SR waiting in the wings to come on to tell us all about the week ahead and what to trade. But for now, European indices looking like it's a risk on at the moment this session, early in the session. The stock 600 was set for its biggest weekly fall in 2 months as of Thursday's close. But now looking at this, it might just dodge that.
And then stick around because afterwards we've got a real treat for you. It is Anthony Batista has just entered the building. So Bat's going to be joining us after and Issa. Stick around, go make yourself a coffee. We'll see you in 2 minutes.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, trader friends! we're back with Isar to take us through the main tradable events in the coming week.
Yes. Not quite as exciting as what sounds like happened last night.
Oh my goodness, I didn't. Yeah, we were at Brat in Hackney. I showed our trader friends some of the pictures.
Beautiful restaurant.
The food was amazing. Like, I didn't know this place existed.
So good. Yeah, it's one of, like, that whole area has a bunch of amazing restaurants, but Brat is probably like the best.
So which one have you been to?
Hackney,
yeah.
The Hackney one's great. There's also in that area, there's Manteca.
There's another one.
Yeah.
There are many others.
Yeah, Hackney in general has some amazing food.
Yeah.
And the event today is going to be quite near that area.
Yeah.
Because it's in the Dalston kind of Hackney area. So I think there are still some tickets left, crazily, right?
Yeah, there are some tickets left. So trader friends, if you're still wondering what should I do tonight, do come, because
we will both be there.
Yeah, we will both be there.
Yeah.
Come and tap us on the back, but just don't worry, I'm not Monkey Man, because that freaked me out last year. And then the best thing I heard last year was Andrew Duck was there. And then he said, he came over and said, Ange, I knew you came before I even saw you because I heard you laugh.
But just across the room.
Across the room. But come, because Rich's credit card will be behind the bar.
Critical, absolutely
very
critical.
Yeah.
The other thing is, last time it was Tom like firing trades at Rich. I've never seen Rich as stressed.
Yeah.
It's like sitting on stage just processing a million trades.
And because I spend so much time with Rich every day, I know why he's stressed, because he and I are equally blind. And the venue last year, those of
It
you
was
that
quite dark. Yeah.
It was dark. It was like Pakistan dark. And I was thinking, how is he seeing? How is he seeing back there? And I think Britt eventually came with like some sort of light at the back.
Yeah.
But here you are. There are tickets still left. But the last time I checked, we were approaching.
Very few. It's super few left.
Yeah,
so
fast approaching.
bag them while they're
sold-out
still there.
territory.
Yeah, for sure, grab them.
So
Right, because all the amazing US people like Tony are here today, we've shuffled around the order a little bit from what we normally do. So normally this is the last segment of Friday, which is the week ahead. Today we have a couple of things that we wanted to bring up.
Let's bring up the slide.
Hey, there you go. Three main things to think about. We have some US macro data that's coming next week. So we have the revision of Q1 GDP data. We have the May PCE data. We also have some consumer earnings. So we have FedEx and Nike, both of which have had a pretty rough year so far. Both are down more than 15% year to date. And then we obviously have the ongoing Iran-Israel crisis. There was obviously the Trump statements yesterday where he spoke about how he's going to give Iran essentially 2 weeks to come to the table and negotiate.
Yeah, what do you think of that 2-week timeline? We talked about this earlier, and I kind of think, my humble opinion is, he kind of went.
Are you tacoing
tacoing out the door, doing my little, moonwalk, but heading for the exit, and hopefully someone else will sort this out.
Well, if you pull up oil prices, I think you can see what like the market thinks. I think fundamentally,
let's whack up WTI here.
Yeah, some of the risk is gone, but actually like it's still pretty elevated. I just think fundamentally the whole situation is super tense. It's clear that the Straits of Hormuz are kind of at risk. And so I think while that's the case, I think we're going to see this kind of risk sentiment in the oil market, and that obviously might feed through to inflation, which is obviously a worry.
The other interesting thing is the fact that, this 2 weeks, that might be the time needed for talks to happen to see whether there is any sort of standby regime, right?
Yeah.
Because you don't take something out and then have nothing. That would be crazy. That's like Libya crazy.
It also is straight into the middle of the summer, a period that is like famously kind of a bit of silly season in markets.
Yeah.
And so I just don't know what uncertainty is going to materialize in the 2 weeks. Also, critically for my own portfolio, I'm going to be on holiday for the week that ends on the 7th of July. And so I'm concerned that where interesting stuff will happen, I'm just not going to be here.
Issa doesn't know, but we've already rotated him in for a holiday.
Yeah, so, oh my God, so when you were on holiday, they dialed you in to give an on-the-ground take.
Analysis.
Yeah, you were in Milan, right?
I was in Milan.
And you were giving a view of inflation rates of the price of Coke in Milan.
Right, on the pulse, right? right there in Milan. So you are going to be in, tell our trader friends.
Mallorca. I'll be in Mallorca.
Yeah, so he'll take the pulse from there.
Mm-hmm.
We've got the Americans on board today. It's truly global Trade Live with
Yeah,
IG.
yeah. We have our global correspondents flying in around the world.
Soon it'll be like, we'll have more correspondents than CNBC or Bloomberg combined. Yeah.
But I think they're going down and we're going up.
Yeah,
so
yeah,
it will
exactly.
meet in the middle.
They've already. Have you seen CNBC? They've changed up their opening call so that there's a bit of chit chat before they go straight to headlines.
What, just to fill some time?
Yeah.
There was a really famous statement a long time ago from Netflix, which was in their company strategy, and the strategy was, we become HBO faster than HBO becomes us. And I guess that's kind of how I'm thinking about news stuff, right?
Yeah. Everything's about the authenticity.
Yeah.
And the brand right now. And lots of, you said Hormuz, and I had a grin there because it is all about Hormuz because, this is, it actually essentially connects 20% of total daily crude supply passes, right?
I think it's 20% of crude and 15% of natural gas.
Yeah.
And I think that's obviously a fundamental issue. The other issue is it specifically connects Europe and a lot of Southeast Asia. And so I think it's partially why China's kind of slightly nervous looking at the situation in Iran. Iran has been a big supplier of oil to China. And so, yeah, I think just going back to some of the news stuff, I think that's going to be the big ongoing story over the next couple of weeks.
Yeah.
But there are some other stuff going on.
Yeah.
I think we had earnings. The two major earnings that are left were towards the tail end of the earnings season and almost at the start of the next one. But we do have FedEx and we do have Nike, both of which are, in my view, really good indications of some of the consumer sentiment at the moment. I think Nike's been a particularly beaten up brand. Last quarter, they were 9% down on revenue quarter on quarter. This quarter, I think they're expecting double-digit reductions in revenue. What do you think of the situation in Nike? They've been totally battered over the last.
They have been battered, despite the McDonald's best efforts at talking about this whoosh.
Well, to be fair, Rich and I both own quite a few pairs of Nike. And so maybe we're just not trendy anymore.
It's all about, it's all about the, what's the, hawkers, right? And
on trainers.
Yes, on any of you. This is a poll.
I think New Balance is
New Balance coming back, right?
Back in, yeah.
Yeah, and so Asics, have you noticed as well? Been really boosting.
But basically, I think this is
marketing.
all
My
bad
God.
news for Nike.
Yeah. Nike, just getting you across this, trader friends. Bigger Beers, welcome to the show. Why were you late, Bigger Beers? I was watching out for you. Nike.
You have an attendance list
do
of all the regs.
In my head,
Yeah.
right? I remember most things, so you guys watch out. I remember. Nike, Barclays cut the price target to 53 from 60. So
where are they trading at now?
At the chart, 59.
59.
Yeah,
wow. So still a bit further down to go.
Yeah.
I mean, yeah, year to date it's down more than 15%. I think from highs it's down well more than 20%.
Yeah.
I think it's obviously a stock that's been beaten up. I think there will be a price at which it's a buy. I'm a bit of a.
Where do you think is a buy? Here, the low seen in April. What do you think?
So, honestly, depends on what your time horizon is to hold. I fundamentally think the pain that Nike's going through, it's going to just bounce back from eventually.
Yeah.
It just depends on how patient you are. So I think, honestly, even now, I think this is a bit of a contrarian take, but sure, they're not trendy at the moment, but man, Nike is an institution, right? It's such
Yeah, but
iconic
do you remember everyone said that about Nokia?
Yeah, but it's not Nokia. Is it? It's one of the strongest brands in a space where brands have cycles. I don't know. It depends on what your time horizon is, but I think if your time horizon is very long, I think it's probably even a buy now. That being said, I do think it's going to be a period of continued pain for Nike until they really turn around some of the operations.
Yeah, so just on that note, catching the tailwind from what SR is saying, is now at levels last seen in March, but also if you go back on a technical view here, the last time it was at these levels was March 2020, So
Actually, maybe it's a controversial tape.
Are you wearing Nikes today? I know Rich is wearing Nikes.
I'm actually not. I'm wearing one of my few non-Nike trainers. But I genuinely do think, I just think Nike's going to bounce back. I
know what you mean. I know what you mean. But at the moment,
they've changed management. They're making some difficult decisions.
They are.
I think I don't know. I think it's all a bit of a exaggerated story, but we'll see, I guess.
I hope you're right because there are a heck of a lot of downgrades, not just Barclays, Morgan Stanley as well. Needham also cutting their price target on the stock. So it's
I don't know. It's just this is a good example to me of where like. Sure, everyone is negative at the moment, but there must be a price, right, where it's a buy.
We need to
like
how this for posterity, people.
I know, yeah. I'm gonna like. There's gonna be a clip of me in like 2 years' time.
Flashback.
Yeah, exactly.
Flashback. Remember when he said, "Yeah, now's a buy for Nike."
Yeah.
Or could it be that this is another Nokia? And the only reason I'm asking that is so, trader friends, if you want to trade Nike and you want to trade it without being like a long-term trader or a regime trader, watch Lululemon's results.
Yeah.
Every single time Lululemon comes out with bad results, Nike falls. Yeah. So every time Lululemon comes out with good results, Nike gets a bit of a lift.
Why do you think there's such a close connection between those two?
Perhaps something to do with the fact that, Lululemon
Just
is...
the same consumer, I guess. Or...
Yeah, and Lululemon is considered like higher end, right?
Yeah.
And it's good stuff, but higher end.
Yeah, it's interesting. I also think like fundamentally, Lululemon and Nike are both kind of millennial brands.
Yeah, yeah.
And
do you know how targeted Lululemon's demographic is when they tell their marketing team to...
Is it like incredibly specific?
It's incredibly specific.
Yeah.
So it is...
You know what? Their work clothes are actually absolutely amazing.
Yeah.
They're so good.
Yeah. Frank Caberna is like...
he's obsessed with
he's
Lululemon.
Obsessed. Don't give me a bonus, just give me Lululemon vouchers. And after he talked to me so much about it, I was like, oh my goodness, I need to try this out. But they long lasting, but they're expensive.
They are expensive.
For what they are.
Yeah.
So the thing to remember is they're super specific.
Yeah.
And if I had to choose the two, I would choose Lululemon, not Nike, because they seem to have some sort of management chaos at the moment. Lululemon is so specific that...
Should we do like a kind of wager, which is like a year from now, if the year-on-year change in Lululemon is better than the year-on-year change in Nike, like if Nike is better,
you buy me a
pair of Nikes.
Yeah.
And if Lululemon is better, I'll buy you. What's your favorite thing from Lululemon? What's your go-to?
I like their sports.
The gilet thing. Okay,
like
fine. Deal. Easy. Deal.
Give a shake on it.
Deal. I'm very confident. It's basically a pair.
From today. Yeah, it is a pairs trade.
1 year pairs trade from today.
Bigger BS. Nikkei has a partnership, but I think they have delayed it. They've rolled something back with the Kim Kardashian deal. So check it out. Right. So
you're coming off strength. I think I've got a good chance of this.
Okay, well, we'll see. We'll see. Right, so what's up next on your list?
Right, sorry, yes, we're running through. So we spoke about Nike. I think FedEx is a similar story. Slightly weak earnings in the last quarter. I think this quarter is also expected to be a bit weak. Let's see where they land. We also have some US macro data. We have GDP revisions coming out next month, and we have the and we have the PCE data. PCE coming after slightly cooler CPI. I think we're expecting that number to be fairly cool. I think the reality is that where the Fed is at the moment, I don't think this data point is that important. I do think the June data will start to be important because the next meeting is at the end of July. So we'll get that data before the Fed makes their decisions. So I think from a macro side, it's a quiet week. There's almost nothing in Europe. From an earnings side, also kind of a quiet week, but we do have Nike and we do have FedEx. So I think all the big news will be about the Iran-Israel situation.
Yeah, I like FedEx too because it's got its finger in every pie.
I mean, the shipping, I think shipping costs is something that they're exposed to. Tariffs is something they're exposed to. But at the same time, they are one of the strongest indicators, maybe with the exception of some of the credit card companies like Visa and MasterCard. Like, they're one of the strongest indicators of the consumer. And I think it'll be a good indication of how a consumer's feeling. How much are they ordering stuff?
Boise's on your side. He wants a pair of Nikes too.
Yeah, I think exactly. I think a year. I think we're in good shape. I think
you guys are right because I do like the Nike brand. I do.
Yeah.
Speaking of which, it's going to be interesting whether or not markets, really buy the whole kind of, inflation is going to be not too bad because JP and gang still, holding on to that data dependent, right?
Oh my God! Do you want to have a look at the CME Fed Watch tool? It's fascinating. Like 7 members of the FOMC said that they don't expect any rate cuts at all this year. So I think we're starting to see weirdly a bit of divergence until the data kind of clarifies the situation. Yeah, like look at that.
I know.
So is this for July? Yeah. Exactly. This is the end of July date. If you go to December, just look at how broad that distribution is.
Yeah.
It's like 100 basis points. It's like
markets look really, really undecided there.
Yeah. So I think, and this is what he said in the press conference, right, this week, which is fundamentally like the next, he thinks 2 to 3 months will give them a lot of information on the impact of tariffs, will give them a lot of information on the strength of the labor market. And so I think what we'll start to see is that this very wide distribution will start to like settle on an expectation, but at the moment it's still very wide, and we're not that far out. Well, that's 4 Fed meetings from now, and it's still very broad. So I think the data that will come in, not in the next week, but in the next 2 to 3 months, I think is going to be really critical to where they land.
And also what happens in the Middle East. It's also potentially hit inflation.
100%. And I think one of the bigger stories, like frankly, is that the market doesn't seem to care what the Fed's doing at the moment.
Yeah.
Like it's like
that's a sideshow.
Yeah, well, the FOMC was like a total non-event. Markets barely reacted. Like, I think what we're seeing is it's event-driven movement, and it's just strength of the like juggernaut that is the U.S. consumer. It's all the earnings strength, and so like. I just think the reality is that unless the Fed does something quite drastic or the data gets materially worse, I just don't think the macro is driving that much.
No, yeah. It's all about Middle East and what happens on the terrorist front.
I should get going because you need to spend all the time with Tony.
Well, producer Phil, what is the, Isar's asking, what is the plan? I know Tony came in early, but what is the plan? We've got plenty to talk about.
There's loads to talk about today.
Yeah. Yeah, we've got Tasty Q&A special coming up in 2 minutes.
Okay.
Yeah. Thank you, trader friends, who sent all your questions in to me. I now know which of you are awake at 11 p.m.
When you're tweeting out.
Yeah, I'm like, look, coming back. I was like, hey, guys. You're on my first call list if I ever get abducted. I'm like, wow, this is great. But I have had 3 long nights.
Yeah.
Tonight being the 4th.
Yeah, and what I should say is, people still sign up to this event.
Yeah,
there are only a few tickets left.
And it's not often you get this opportunity because otherwise you have to fly to the States to watch them, and it's good fun. It's not long and it's super quick, and you get to drink off Rich's account. Mervyn John saying, for info, Nike is in backwardation for most of the next 2 years. Mervyn, you're with me. You're coming with me to Lululemon.
Yeah, let's see.
So Lululemon's marketing team, they have like
I'm not saying they're a bad company ad.
Female.
Yeah.
I think above 30.
Yeah.
Average salary per year, 6 figures.
Right.
Yeah.
Yeah. Maybe this is what Nike's marketing team should do.
Yeah. No kids.
Oh, like dual income, no kids.
Yeah.
Do you know the term like dinkwad?
Yeah.
Dual income, no kid with a dog.
I know.
Was the peak COVID demographic.
Yeah. I wanna start a business that's dinkwap. So with a pet.
With a pet.
Yeah.
Yeah.
Yeah. We're gonna have to wrap because get your questions in for that. Slam the like and subscribe button. And also tell us which side of that pairs trade are you on? Are you on?
Are you Lulu or are you Nike?
Are you Nike? So let us know.
Monkey Matt, I don't think I've ever worn a pair of Nikes. Well, buy one now. We have a year. We have a year to turn this around.
No, Monkey Man exercises in the morning. So buy Lululemons, Monkey Man. He exercises. Buy Lululemon. Send us questions for Tom Sosnoff and Bat because we will get them asked this morning.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees, with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome back, everybody. So, look who is sitting to my left. It is Anthony Batista. Welcome to the show, sir.
Thank you for having me, sir. Appreciate it, Rich.
They've got an American national anthem playing for you in the background.
Thank you, guys. Appreciate that.
We roll out the red carpet, indeed.
You do. But I feel like it's my adopted nation here. I've really had a great time. I've only been here a handful of times, 3 or 4 times. And this time, by far, everybody has just been wonderful. I don't mean just here at the IG office. I just mean the whole country. I mean, from the cab drivers to the people in the hotel.
Apart from Harrods, who decided to shut a restaurant.
Except for Harrods, who decided to shut the restaurant that we had a reservation for, that they confirmed the reservation for, actually told us they're going to charge us £45 each if we don't come to the restaurant. We go to the restaurant doesn't. It's been closed for a month. So it must have been an all automated message. But it was okay. We made the best of it, and it was a good time.
Great. So, Bat, where do we even start? We had a great interview online that people can find the whole thing on YouTube. But trading since 1984.
Yeah, pretty close. Yeah. Mm-hmm.
And you got your own place on the exchange in '87.
That's correct. I bought my seat on the exchange the day of the crash. I tell the long version on our last interview, but I had a bid in lower, and when the market crashed in the '87 crash, they hit my bid. I tried to cancel it. Sometimes it's better to be lucky than good.
That's it.
I think this was one of those times. I tried to cancel it. They really never traded lower, maybe $10,000, $20,000 lower than that. I thought they were going to zero. So, and that was all the money I had. So it was a scary time. Scary time.
If honestly, if you guys like the movies about the industry, Wall Street, trading places, forget about it, right? This guy's life is better than any of these movies, and
I've been lucky.
What are some of the most memorable moments? What sticks out as a a trading occasion when you were just, holy
Yeah.
shit?
I would say after about, for me, I started with a limited amount of capital. I didn't have anybody, I traded my own money all the time. I started with $5,000, and I think a lot of people out there, have similar amount of accounts. But I was a market maker on the floor of the exchange, so I was taking the other side of everybody else's trades.
Yeah.
And I think at one point I had what we call an out trade, which are non-existent now, especially with electronic trading. It's it's beautiful because every time you make a trade, it's absolute. It's there. It's in your activity statement, and there's no changing it. But back in the day, we were writing everything down. And I had an out trade that basically busted me out. I thought I did something with a gentleman who stood very close to me, closer than you are right now. And
Wow.
He thought he was doing the opposite thing, and it was about $30,000, which, one investor's floor is another investor's ceiling. I had only been trading for about 2 or 3 months. That was about everything I had. So I thought I was busted out on a mistake, and I thought, moving from Brooklyn to Chicago and leaving everything that, it was done by, my whole career was done because of a mistake. And that was probably the scariest time for me.
I bet.
Yeah.
And then on the atmosphere on the floor.
Yeah.
Just a
Awesome.
boys' club.
Yeah. I've heard other traders say it was like college with money.
Yeah.
I think that's a pretty good description of it. Yeah, it was great. The camaraderie. Even though you weren't, drawing your sword or jousting or something like that, felt like it with every trade that you were jousting the person. And it's funny because I didn't want the other person to lose money. No. Not because I'm kind or something like that. I just wanted to make money. So if I'm doing something that makes me money, that makes you money, it's a wonderful thing. Even the investor, remember something, as a independent market maker on the floor of the exchange, you want every customer, and that's who you're talking to here today. You're talking to the customer. We wanted every customer to make money. Mm-hmm. Why? Because if they make money, they'll come back and trade. If they come back and trade, I get to make money.
Yeah.
So every trade, I want it to be a fair price for the customer and a fair price for me. And now with markets that are, in the US at least, 1 penny wide, the only thing that's missing is how to learn the strategy. So learn a strategy that makes you profitable for the assumption that you have in the market, and give yourself a probability of success that's over 50%. You put yourself in a winning place.
And if we go back to late 80s, early 90s, what was the actual process? You saw the market move.
Yeah.
You had a bit of a feeling, and then...
Sure. I mean, a little bit different on the floor. I think when I left the options exchange or stock exchange, if people are more familiar with that, you kind of miss the noise and the background noise. I mean, that's one of the reasons why we have volume on the trading platform, is to hear those dings, to get you going, because you want to know, you want to feel something happening. And I think when I was, first left the floor and I was sitting at home and I'm in my office with the door closed and, I have a little bit of memorabilia hanging around the walls, you start, you're left with your own demons, you know what I mean? You feel all alone, I don't know if I liked me that much, you know what I mean? I want to be alone with me.
Take all the mirrors off the wall.
Yeah, exactly. So I missed that. So I missed the guys and gals, and I'll tell you something. I mean, there was maybe a handful of women on the floor, maybe a dozen out of 300-400 people in the pit that I was in. They were some of the best traders. I mean, they were just better than us at most times.
And what actually happens? So you've got slips in your hand, and then you spot somebody you want to trade with?
Yeah, so it's organized chaos. I mean, it's best to see some of the older films. I mean, even the funny things like Trading Places. It's an old film comedy with Eddie Murphy in it and stuff. And they kind of see somebody yelling, "Oh, I'll do 2 of those." This is 2, and this is 20. So if I'm buying, I have my hand in. If I'm selling, I have my hand out. That's how it goes. So if I want to do 22, if I was selling 22, you would have to mirror me and go buying 22.
Right.
Or you say, oh, no, I only want to buy 15.
Okay.
You know what I mean? Or this is 16, this is 1, this is 6. So you make these
whole different language.
Yeah, basically a whole different language. So you and that's what I mean. You have some, there's some room for error there. You know what I mean? I know you're going to have Tom on later. He was the worst with hand signals. I mean, first of all, he doesn't have the dexterity that you need. You know what I mean? He can't really move his fingers right. So it was always a problem with Tom. Yeah, you had to double check. You had to double check with him. But I missed that camaraderie. And if you watch our show, the ribbing of everybody. You know, if somebody had a big nose and, you know, you made fun of their nose, you did not, if you were the person with the big nose, you did not acknowledge that it bothered you.
No.
Because if it did, you'd be known as like Nicky No-Nose, even if your name was John Smith, you know what I mean? You know, it didn't matter, you know, that kind of thing. So it was a lot of fun. So I miss.
It's easy if you're called the Batman.
I got lucky. My last name is Batista, and when you go on the floor of the exchange, they used to give you up to 4 letters. Now, when I got there, they only give you 3 letters, and the first 3 letters of my name was B-A-T, so I tried Bat, and I didn't really think about, you know, the ramifications of it later on.
Okay.
But yeah, everybody called me Batman from basically that day on. So it's just easier than yelling, you know, your name, you know, in a pit. Somebody says Batman, it works out really well. So.
And so you mentioned about Soz there and his trading skills.
Yes.
Now the two of you sit across the desk from each other, sit across the studio.
Yes.
Day in, day out.
Yes.
And you both run a book on Tasty.
Yeah, for lack of a better words, we both do our own trading. He can't do more than one thing at a time. So when he trades, all the trades that he makes, I send them out to all of our people on the follow page, which is free at Tasty Trade. Anybody who has a Tasty Trade account can see them. I push them out. We call it push it out for him. So I get to see everything he does.
Yeah.
He doesn't get to see anything I do. So when we have my follow page too. So a lot of times I'll get to tease him about his bad trades, because who cares about the winners, right? They take care of themselves. Yeah, this is a carp. There's a carp. Yeah, it's a little fish. Yeah, he's a carp. So we have a lot of fun like that. So I have a little bit of an inside track more than he does. So it makes it a little bit easier for me to make fun of him.
And we have your watch list up here.
Oh, yes, you do.
So why don't we run through as if this is a tasty show? Give us your feeling of the market just now and what's going on.
Yeah, so the first thing I have up there are the E-mini S&Ps /ES, and they're trading 60.24 right there. They're down about 10.5 points, or we call them handles. And that gives you see the percentage change to the right of that. So basically, it looks like the market's a little bit unchanged, maybe slightly weaker here. You got the E-mini S&Ps, NASDAQ, Russell, Dow, and then volatility. I think volatility /VX is probably one of the more overlooked indicators for the market. You know, everybody talks about VIX, which is the volatility index, the fear index. Those are the futures on VIX, and they're more of a daily indicator of what volatility is doing.
Okay.
So volatility right now is up about 1.5%, which is a significant move relative to how much the market's down. Like I said, I felt like the market's basically unchanged, it's slightly lower.
Yeah.
And that's indicative because if you looked at last night, even the S&Ps were down about 4 or 5 times as much as they are right now, with all the news that was coming out, out of the White House and every place else. So.
And then you talk about in handles more than percent, don't you?
We do. I've tried to. Customers like percentages, so I like to incorporate both of them. Like I'll say the change and the percentage, just to get them used to what I like to look at, and me used to what they like to look at.
Yeah.
And maybe we can come to a. That's the compromise, right? You come to a compromise. So we talk more about handles. But if you're new to trading, and I said we're down 10 handles, or like when I just spoke a moment ago, I said 10 handles or 10 points. So you go, oh, okay, now I know what a handle is. It's a point, because you might think of it as a point as a newer trader. So we're down 10 points. What does that mean? Like without a percentage, and I think this is where the customer's correct. Is 10 a lot or is 10 a little? And you see it's less than 1/8 of a percentage point. You say, all right, so 10's a little. Yeah. Volatility up 1. Well, now it's only up 1%, but 1 or 1.5%. You say, oh, that's up a little bit more than the market just being unchanged. So what happened last night? I would say the market was probably weaker and volatility was probably higher, just by looking at those two indices, not knowing what happened last night.
What kind of level on volatility gets your blood going?
This is it. Like around 20.
Right.
Anywhere between 20 and 25, and we're 21 right now, 21.05.
And that's probably changed over the years, hasn't it?
It has. I mean, listen, during the crash, they really didn't even have a volatility index, but it was, closer to 100 at that time, you know what I mean? So it was a lot different. But 20 to 25 is probably nirvana for most traders. Great for premium sellers like myself.
Yeah.
You get enough movement for premium buyers.
16 just doesn't give us anything, does it?
I remember when it was 9, so that's tough for premium sellers. It's tough for everybody, premium buyers, it's just tougher because you don't get a lot of movement and so much complacency.
Yeah.
So in the 20 handle is pretty good. It's the Goldilocks, I think. So right now is the time.
Okay. And then we've got, we move on to some of the commodities as well.
I'm the world's worst commodity trader.
Right.
Tom's second worst. So you can have him on. Don't listen to him.
He backs you up.
Yeah. And then you got the notes and Bitcoin, Ethereum, and as we go down, oil. See, like commodities for me, they fall out and in of favor pretty quickly. Oil's the big one right now. So oil's been moving around a lot. Huge volatility, but big product. For retail investors. Even the options on oil, big product. It's 10 times the size of an equity. So.
I get killed on oil time after time, whether it's puts, calls, whatever way I'm trading.
It's too big of a product for retail investors, for most people's account. So you want to be spread in oil. You want to have a call spread or a put spread, something that's spread off, diagonal spread, one month against another. But you definitely want to be, I think you want to be spread in oil. If you want to trade the futures, you could trade the micro futures, which are 10 times smaller than that big /CL future. And that brings it down to like 100 shares of stock instead of 1,000 shares of stock, or maybe a little bit more in oil. So, when you're trading, you might trade 100 or 200 shares of stock or the equivalent of that in an option trade. When you do one oil future, you're doing 10 times that amount. Yeah. And it's just too big for most retail investors. I think that's what shakes you out. Tom came up with a saying, and I'll let you speak, I apologize. You never know how big small really is. You really have to keep it small. You never make enough money. You're too small when it's going well. Yeah. And then you're too big when it's going bad, even with the same size.
Great. We can take that chart down there. Thanks, guys. And then let's move on to single stocks. Then, what over the years, what's been your favorite one? What's your lucky stock to trade?
I've had some pretty good success. Listen, my time frame is usually like a month or two. So I don't marry, positions. I try not to. It's not a long-term thing for me. Tesla's had some good volatility lately. I've been doing okay in there. Reddit's been some good volatility. I've been trading good in there. I got lucky in some oil option trades that I've had, which have been good in there. But it falls in and out of favor.
And it's more, well, the IV rank is obviously very important.
Yes.
And do you search sometimes by IV rank and just...
I do.
Okay.
So even on that list that you had up there, I don't have a lot of stocks in there, but I'll go to the high option volume list. I mean, I'm an option trader. If you're a futures trader, you look at the futures. If you're an option trader, you look at the options. So we have a list called the high option volume list, and I will just click the top of the button there and the top of the page there, and it puts them in descending or ascending order, whatever you like to look at, and I go from there. We have another little indicator called IVX 5-day change. And what that'll tell you is what volatility has done over the last 5 days in that particular product. So if I have a high IV rank, I like to sell premium, so I want to sell it when the IV rank is high. Yeah. And the IVX 5-day change has also ticked up. I feel like I'm catching it on the way up, and I'm looking for that to revert down. From our research, we found that volatility reverts back to the mean faster than the stock price. Yeah. So if I could find volatility elevated and, I can trade it small enough where I can, kind of last through the volatility expansion, I feel like I put myself in a winning.
And that 5 day is quite a new thing, isn't it?
Yeah. Been around for a little while. I haven't when I was trading as an independent market maker, I never looked at it. But I think as a retail investor, that's what I am now. Yeah. I think it's really important. So for me,
king of the retail investors.
I don't know about that, but I don't mind them following me every once in a while. Sure. And I follow them. I get great ideas from people writing us in and stuff. You'd be surprised. Tom has always, he's the pioneer of this, challenging the retail investor. And I think you'd be surprised at how brilliant the retail investor is. They know their stuff. They're just not confident enough sometimes to do what they want to do. Yeah. And if they see somebody else with experience in the field saying, hey, that's a great idea, if you have confidence, you play better, whether it's a sport or trading or at work. If you're sheepish when you come to work or you're worried about what your superiors, thinking about you, stuff like that, you don't perform well. But if you think you're the king of the world, you perform. And I think that's what it comes down to. It all comes down to confidence.
We actually...
You got a good Learn Center, I saw. You got about 8 or 10 videos on there already for a new trader, a new investor.
That's it. Our beginner's guide to options.
Yeah.
So we're going to carry on with that. Sahil over in Chicago writes us these fantastic market measures.
Good.
And we've got a new video editor on the way. So
you got to get them over 100. You got to get them in triple digits, because you'd be surprised. Like, we always think about, like, when we would do these ourselves when we first started Tasty Trade, you repeat some of the same things. How much can you say about, what a call is, what a put is?
Yeah.
But it hits people differently. Like, I remember a long, long time ago, I didn't come up with it, somebody else came up with it, when you buy a call, it's like a phone, you're calling up somebody. And when you buy a put, you're putting down the phone. That's when we had landlines, what I mean?
Yeah.
Not anymore, now you just click a button, right? Yeah. So call up, put down. Oh, wow, if I buy a put, I want the stock to go down. If I buy a call, I want the stock to go up. If I do the opposite, I want it to do the opposite. And that hit with some people.
Yeah.
And I had been telling people what a call option was, for 5 years, they weren't getting it. So
Yeah.
it's all the way somebody perceives it.
We've so one thing that made me realize how advanced our I was going to call them guests, our viewers are. They started a Discord channel. So now we've got the chat going on, as you can see in front of us.
Yeah.
During the show, but then a Discord channel afterwards. So it's like an after hours. And the amount of ideas going through there is absolutely incredible. They're really know what they're talking about.
So that's where you're getting these good questions from. Here, I thought you were brilliant. You were getting it from the chat. I didn't see that. I saw one person say, can you see Tom's trade in the UK? I mean, you can see it on the Tasty Trade platform if you sign up for that. And the platform's free. I don't even think you have to fund it. You can get all the follow page and everything in there.
Yeah.
Sure. Yeah, for the world to see.
Now, give us an idea. So the Tasty Studio. Is there a funny moment that you remember that you've just been?
Sure. When we first started a long time ago, I'm talking the first 2 or 3, we've been doing almost 15 years now, 14 years and change. I went out for dinner, and I think I had Greek food. I think it was bad tzatziki, like the white sauce. I think there was something wrong with it, but me being me, I ate it all.
Yeah.
And the next day I came in, and I was just sick. I'm just sick. And we were talking, and we have it on video. I'm sure the Chicago team can find it for you someday to show it to you. But I just said, in the middle of we're talking, I said, Tom, we got to take a break. He goes, no, we're not taking a break. Like he's watching the clock. No, Tom, we got to take a break. We got to take a break. And before we could take a break, I pick up the pail that was next to me, and I lean over. You don't see too much. You don't see anything really, but I mean, you can just hear me.
Yeah.
That's not the funny story. The funny story is, I'm laying in the fetal position, in the next room, and Tom comes out and says, "Are you ready to go back in? We're, break's almost over." And I was like, "No, I'm not ready."
Are you kidding me?
But 15 minutes later, after I cleaned up a little bit, I was back on the show and being sick. So that was kind of
the professional.
Yeah. Well, I know I would have gone home if it was up to me. It was Tom that said, you got to get back in there, man. We got a show to do. So.
Right, speaking of the devil, he's in here next. Tom Sosnoff coming up. Tony, quite a few of the viewers coming along tonight.
Oh, that would be awesome. I'd love to see you guys. I think the doors open at 5. Is that correct? Yeah, I'd love to see you guys. I know we have a few more seats. It'd be great to have you. We kind of talk around for about an hour beforehand, and then we go for trading for a couple hours and talk afterwards for a half hour, an hour, something like that. Have a good time. It's a great show. Free, so you get what you pay for. Hopefully we'll overperform.
Good stuff, Tony. Thank you.
Thank you
very much.
Appreciate
Absolute
it.
pleasure to have you. Tom Sosnoff coming up next with all sessions open. What are these US stocks going to do after a day's rest? Find out in 2 minutes.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, 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 trader fans, welcome back to the show with myself and the very famous Tom Sosnoff here, who's traveled all the way from Chicago to be with us. Loads of people here coming to the event tonight.
Excited?
You hear the American anthem playing in the background?
I do not.
This is the kind of
Not a good time to play the American anthem right now.
Where loads of people on the chat going, hey Tom, great to have you on. We even have people from your last trip.
That's awesome.
Yeah, from Birmingham, who are coming. Let's quickly check on the all sessions first, because this is something that is a USP here. Basically, you can take a position on US stocks way before the cash open. So just checking out and zooming in. Do you want to read us through the winners list?
So you think with my 10-year-old LASIX that I can read that screen?
You laser 2 eyes, right? Not just one. We checked that out yesterday.
No, 2 eyes.
Yeah.
2 eyes.
So yes, you can.
I mean, I have I always joke with Tony and say I have, perfect vision, but I'm not actually sure that my perfect vision can read your screens. But it's I'm not used to the 3 a.m. This is when the
You're still asleep.
Well, of course, yeah. I get up at 4 a.m., so this is I still have an hour to sleep in the U.S. But this is when they kind of open up the the initial indications and some of the ETNs, some of the over-the-counter markets. This is not,
Right.
and these are not exchange markets.
Yes, no.
Let's be clear.
Yeah.
These are market makers basically posting their markets on various OTC exchanges and private exchanges and stuff like that.
Totally. And let's just get, I'll talk you through some of the sessions, all sessions gainers here. So we've got names like Riot Blockchain, we've got Novavax as well, up slightly there. Novo Nordisk coming back after a bit of a down week so far. Lots of volatility there. And it is triple witching, of course, today as well.
Yeah, we usually, on the overnight session, we usually actually just watch the futures. So most active traders, unless you have a position on an individual stock, you're really not going to look at 3 a.m. stock prices. You're going to kind of look at the overnight futures, because I would say 90% of the money flow is into the futures markets overnight, and mostly ES, the S&P 500.
Yeah. And taking a look at the losers list as well, was at JD.com. Lots of the consumer names are down. Pintorso, PDD Holdings also down 8% there. I think you traded Alibaba and perhaps
I trade all the stocks you have on that board there. I trade virtually just about every one of them.
Any tips on what you're going to be trading tonight?
Oh, I mean tips.
Yeah, like
we're going to do about.
You said 40 trades?
At least. We've only done this show in the U.S. This new show with Tony one time, and we traded about 40 different underlines. So it was a lot. It was a little much. It was a lot. But we did about.
I think you almost broke Rich's eyes because he was there, and his fingers. He was there punching away like a.
Yeah. Well, now he's 6 months. He's got 6 months more practice, so he's going to be good. But we're going to do probably about 20 different futures, and about 20 to 25 different stocks. So we like to mix it up with half, because that gives you like true non-correlated like fun. And so we're going to do, S&Ps, and right now the kind of the hot futures would be crude oil, obviously. Gold's moving big overnight. Crude oil's been moving big the last week. Silver moved huge last night. S&Ps, NASDAQ, Russell, bonds. We have a big position in bonds, so we're going to play all that stuff.
Nice, nice. Abby Fine chiming in on the chat because his flight, he was meant to come tonight.
Yeah.
And his flight's been delayed because of the Middle East.
Well, then we'll delay the show.
Oh, did you hear that? Abby Fine said delay the show. Really
I'm so bummed.
You know, saying really hoping tonight's event will be recorded.
It's not.
But we can. Producer Phil is in my ear going, and I know that we have the tech available.
Yeah, so let me tell you why we don't record our live events.
Okay.
It's kind of a funky thing, but in the world of finance, when you do something live, it's pretty much like almost protected by free speech.
Right.
But from a regulatory standpoint, but when you do something recorded, it's considered kind of marketing.
Got it.
And then, even though you're obviously not marketing, we're not charged for anything, any of that kind of stuff, and it's our money and all that, it's just has a different regulatory risk. And so that's the reason we don't record our live shows. Like, we like to have fun, and we don't want to necessarily have
He doesn't want to hold back, is what he's saying.
I don't want to have our legal and compliance teams listen in.
And I get that, because, yeah.
I want to have some fun with the audience. I want to have some fun with all the trades, and I don't want it to be a marketing piece. So it's kind of hardcore. I'm bummed. I read this morning that a lot of flights to the Middle East are.
And Avi, I think, is in Tel Aviv.
Tel Aviv.
Let us know if you're in Tel Aviv. Yeah.
That's bummer, because a lot of flights are just delayed or canceled or whatever, and I understand it.
Yeah. So, trader friends, let us know who else have questions. And I think Bigger Beers is coming as well. No, Away from the Numbers is coming later on this evening.
The only thing I'm not going to accept is somebody wrote me an email last night. They go, Tom, I'm bummed I can't make it tonight. I'm like, why? And because I was just messing. He goes, it's too hot in London. And I go, that's not.
No, that's not good. No, we ate at that amazing restaurant.
Yeah.
Tom ordered amazing food, but it was hot, wasn't it?
It was hot. But you know what? We got out last night. It's nice today.
Yeah.
It's like 80 degrees. It's beautiful.
It's fantastic. So we have loads of questions, because when I was on the cab back last night at the Uber, I was like, oh my goodness, so many. You guys who trade options do not sleep, I've decided. Do not sleep, which is...
I don't sleep, but for lots of reasons. A, I'm getting old. I gotta go to the bathroom. I have issues. No, I don't really sleep much anyway. I never have.
Wow. So, yeah, you guys are going to be on my first call list if I ever get abducted, because one of you will pick up my email
yeah, for sure.
immediately. So, are we ready? Into the Q&A sting right now. Let's do this. Right, here we are. So, hit us up with our first question, our special tasty Q&A with Tom Sosnoff. Right, the first question is from one of our loyal traders and also one of our first Trade Live with IG fans here. My question for Sosnoff: given you love markets and trading, how on earth did you find time to build a business, or two actually?
Yeah, actually, Tasty is our third business. First, we built a prop business, then we built Thinkorswim, then we built Tasty. It's kind of weird, but since I'm in the same business, like, I always made fun of, or I always had fun with the idea that when I was trading, I was actually beta testing at the same time.
Nice.
So I've been using our software that we built, first Thinkorswim and now Tasty, exclusively since the day we started building it. And so what that means is, you kind of know every nook and cranny to the platform. So it's not really like work. But the other parts of it, sure. We do a lot of traveling and we promote our business and things like that. But you know what, Andrew, it's kind of like when you're building something that you love the space, it's almost not like work, even though I know it is. It kind of feels good.
Yeah. And you're also ironing out the bugs along the way, right? You're kind of seeing what works, what doesn't work.
Well, I'll tell you the crazy thing. In most business, in a lot of, not most businesses, but a lot of businesses, sometimes the CEO, especially in the world of finance, doesn't even trade. Like I don't know another brokerage firm CEO that actually trades. I don't know another brokerage firm CEO that actually uses their own software. I love to tell. Can I tell you a story?
Go on then.
A fun one. I was listening to a speech once by Ben Bernanke. He was chairman of he had been chairman of the Fed and he just retired. And he was giving a speech to a bunch of high frequency traders. And at the end of the speech, and this is Ben Bernanke, so at the end of the speech, you got to ask questions electronically from the room. So on your table, it had an iPad. And on the iPad, you could ask Ben Bernanke a question. So everybody's like, don't do it, Tom. Don't ask a question. I'm like, I got to ask. I got to do it. I got to ask one question. So I said, what do you think about bonds? What do you think bonds are going to do next? Now, this I'm asking to the chairman of the Fed, he had just left the Fed. And he saw the question. He goes, somebody just asked, what do I think about the bond market? And he looked at the crowd and he goes, I leave that to my investment advisor at Merrill Lynch.
No.
And I was like, you gotta be kidding me.
No, he actually said that?
And I'm like, you're Ben Bernanke, okay? You should push a button and do whatever you want to do on your own platform. What do you need somebody else telling you what to do? Anyway, my point is that even the chairman of the Fed doesn't kind of do his own thing. And so I think that if the Fed chairman did his own thing, they might understand how the markets work better. Yeah. I've always argued that politicians
should all trade.
Should all trade.
Yeah.
And everybody says, no, it's a conflict of interest, it's all this stuff. And I'm like, I don't think so. I think what it does is it teaches them how financial markets work, teaches market structure, teaches risk. And so anyway, but the answer to Andrew's question is, it's a love of the game clause.
Yeah. Bernanke, I was gutted I didn't manage to meet him in Davos, but I did manage to meet the late Paul Volcker.
Oh, nice.
Yeah, and
nice.
So that shows you my age now. But yeah, Volcker's very, very interesting, very tall, and he talked a great deal about how central bankers should throw sand into the wheels of the economy so it just doesn't overheat. That was his view, but also very controversial. Very controversial.
We have a lot of controversy in the U.S. right now because Trump was calling Jay Powell names. Yeah. And so.
What was the latest one? Stupid.
Yeah.
That's the latest one.
If you've ever, whatever you think about Jay Powell, he's not stupid.
Let's hit up the next question. We've got another one from Julian, who actually came to last year's event.
Yes.
Can we see Tom's trades in the UK?
Yeah. Hey, Julian. I took Julian to the baseball game a couple of years ago when we went. It was great.
Ah.
Yeah.
Don't try and avoid the question.
Yeah.
You're not answering.
Can you see Tom's trades?
Can we see in the UK?
Okay. So here's the deal.
Julian, I got your back.
If you're there, yes. If you're not there, no.
Get on the plane now.
And there's a lot of reasons for it, but what we did is we found a way to be able to send out all the trades to on a request basis. Request only, for people that were there.
Okay, cool. Got that, Julian? Right, we got long list. Abby, fine. I've seen yours. We'll get to that next, but let's hit up the next question on the slide. Adam Deleuze, another one of our traders, and he is a higher net worth trader.
Adam.
Tom, with the rise of zero-day options, more retail access to complex products, stories like Mark Anderson from your Rising Star series, where do you see the biggest opportunities and risks for the next wave of traders? And how is tastylive adapting to support that evolution responsibly?
I mean, any good financial service firm, any brokerage firm, their responsibility is to offer all products. It is not our job to tell you, hey, this is a better product than something. You know, liquidity-wise, you can make your own judgment. And if things are liquid, it's not our role to say, hey, you should trade this product over this product over this product. But we have an obligation to essentially offer every product and that we can, and every strategy that we can to every account. This has nothing to do with your account size. This has nothing to do with your net worth. This has nothing to do with, you could be a big trader, small trader, anybody. We have an obligation to make sure that anybody can trade any product using any strategy that they want to. Now, one of the things that we try to do is if something has no liquidity, then we're very protective of our customers. We don't want them getting ripped off. But if something is liquid, you know, you'll have to use your own judgment based on, you know, whatever the exchange fees are, whatever, you know, that stuff we can't factor in. But as long as the products are liquid, as long as they're centrally cleared, as long as they're cleared, and as long as we think the markets are fair, of course, we'll list everything.
Cool. Right.
And that generation, Dan, I'm sorry, to finalize, to finish the question, the next generation, we are already preparing for it. Like, there's no question in my mind that we're going to be heading towards, you know, more tokenization, a lot more globalization, and a lot more digitization over time. So you're going to be able to trade, you know, hopefully, you know, stocks in different countries using a single currency. I think the whole currency side with stable coins and different currency conversion opportunities is all going to improve. So customers in the UK can trade US products without currency risk and that kind of stuff.
Incredible. And over here at IG, there's been a long development team already working on 24/7.
Yeah, we hope to have a lot of the currency solutions in place by the end of Q3 this year. And, you know, obviously IG basically already offers every product globally. What we have to do is tie it in to a single platform.
Cool. Let's bring up the next slide, people, from Abby Fine on the Tasty platform. How can I track my performance P&L on a position over time and after much rolling up and down and out?
That's a great question, Avi. And let me just say that this is something we've been battling for many decades on building software. And so Tasty has a feature that no other platform has. Our dev team built something called order chains. And order chains allow you to track a single trade. It's built into the platform. It's all automated. And they allow you to track a single trade from inception with as many roles as you have. So roles, adjustments, it doesn't matter. You can have 3, you can have 300. And we track the exact same trade and it tracks your P&L. So to the best of my knowledge, and I'm pretty sure about this, Tasty is the only platform in the world that has this feature called order chains. And it is very effective. It works on about, I want to say, you know, there's a few products like, you know, like that aren't centrally cleared. So for example, like Bitcoin or spot FX, things like that. But for all listed futures and all listed futures options and listed options, it works fine.
Cool. Avi, I know you asked about the recording, but just want to tell you that if you follow me on Twitter, Angeline Ong, I'll try and record some of that stuff for you, but you heard Tom explain why it's not recorded. Let's get some questions in. I know we had some from Mystic Meg as well. So there are some others. Let's whack those up first. Away from the Numbers, whose real name is Neil. Away from the Numbers is coming tonight.
Love it.
Which is fantastic. You weren't awake last night because I think I messaged you. Tasty's been a revelation. As a UK trader, I knew options but struggled with low liquidity and wide spreads. Discovered Tasty via IG Broom 2024 event. Started in March, 132 trades in. Tasty Live.
Love it.
Fantastic.
Love it. I don't think there's a question there, but I absolutely love it.
Yeah, he's going to take it. He's going to take it. We'll
take all the kind words and all the great feedback we can.
Yeah. Mystic Meg, speaking of kind words, Mystic Meg is one of our loyal followers, but would not like the name revealed. That's
okay.
why.
I prefer acronyms or fun names.
Fantastic.
But Mystic Meg, is that Mystic from?
Mystic Meg. Yeah, you know Mystic Meg? You know that character, Mystic Meg? Yeah. So I don't know why this person chose Mystic Meg, but wants to be known as this, which is great. When you enter, I've not met this person, by the way.
That's okay.
When you enter a daily scalp trade, do you have your platform set up to take a percentage profit when entering the trade? And do you ever use bracket orders?
No and no. So Mystic, I have been scalping my entire life. I entered the business in 1981 as a scalper in the pits in Chicago, and I've been scalping until now. It's 2025, and I still scalp. I have never entered a bracket order once, and I've never entered a order to sell on a percentage. There might be a number, like I put a limit order in for sure. You know, like it's some number that I just in my head. Let's just say I'm hoping to make 5 handles on a future. I mean, I'll put a limit in above if I want to, but generally I don't leave resting orders. It's just not my thing. Now, again, I'm a junkie. I sit in front of the screen, and some people that have jobs, that actually have real jobs and do real things, that build real stuff, they need to, which is totally fine. The question was for me, I don't.
Fantastic. We have several others from Mystic Mag. Let's get them across right now. Oh, Monkey Man first. So
a little Monkey Man.
Yeah, right.
Yeah.
Monkey Man is also one of our core traders and viewers of Trade Live with IG. What's the core principle behind Tasty's small trades, big returns approach? And how do you recommend beginners adopt this mindset without getting overwhelmed?
Yeah, Tasty's approach has never been small trades, big returns. Yeah. Our approach has always been trade small, trade often.
Yeah.
And
I'm thinking of Jenny and Liz's advert going over and over again. Well, small and often.
Liz and Jenny came up with the trade small, trade often, and we've been using it for 14 years. And the reason we do that is because we believe in law of large numbers. So we take a very probabilistic approach, very quantitative, statistical, but it's essentially a probabilistic approach to trading. We want to put more wins on the board than losses.
Right.
Now, you can't do that with static products. So like, futures, stocks, whatever it is. But with options, they're much more strategic. So you can actually, you can trade limited profitability for a higher probability of profit. So in other words, if you limit the amount of money you can make, you can improve your probability of profit. It's just a math equation. This has nothing to do with like picking the right thing. You can improve your probability of profit to some number, let's just say like 70 or 80%. It's just math.
Yeah, statistics.
It's not subjective.
Yeah.
So what happens is you create more winners than losers. Now, there's no theoretical advantage there, but what we want to do is teach traders to learn to be successful.
Yeah.
And so that's our game plan. And so to do that on a one-off basis, it's very random. But if you create a lot of occurrences, again, that's the law of large numbers, you're going to come out with statistically right around where you should be. And so that's the approach to trade small, trade often. The number one mistake traders make and why you can't survive, why you don't survive in this business is because you trade too big. So the concept of trade small is just common sense. Trade small, stay around forever. Trade often, law of large numbers.
That's right. Making it easier for you to be successful and, of course, be a sustainable trader.
Yep.
Let's get the next chart up because I know Tom's got, your time's very precious here. Send your questions as well if you've got any to ask at IG.com or whack them in the comments page right here. What was your first trading strategy?
Well, my first trading strategy. My first trading strategy when I got to the trading floor. When I was first traded,
SIBO?
yeah. When I first traded, I don't even remember.
And
That
the
was
SPY
like
pit.
the S&P 100.
Yeah.
So it was 100, not the 500. But my first trading strategy when you get to the floor is whatever you're the counterparty to every trade. Like market makers don't actually decide what they want to do. They just take the other side of what anybody else wants to do. So my first trading strategy was to scalp. So whether I was buying or selling, I was kind of a scalper. After that, when I really turned into being more strategic, my favorite strategy would probably be, some form of short premium, like a ratio spread.
Cool.
We'll do a lot of those tonight too.
Yeah. Jugger, are you coming tonight? Jugger is from Germany.
Oh, we have a lot of people flying in tonight, and we have a lot of people flying into Milan Monday night.
Nice. We've been telling people, someone on the chat, not acceptable, saying that they couldn't get their passport, didn't think they could get their passport done in time here to go to Milan. And I said you could pay 60 quid and get fast track version.
Oh, I don't know.
Yeah. So we got Jugger asking, will it become more easy to fund an account from Europe? Because European banks use the SEPA system and not the ACH. That's the only reason. Yeah. Did not yet. It's not been able to fund.
We've been struggling.
We feel your pain.
We do feel your pain. We've been struggling with this for 25 years, and one of the reasons I'm so excited about, funding with stablecoin and funding with just anything other than using international banks. I despise the fact that international banks, are such a ripoff. And when it comes to money transfer and money conversion, conversion.
It is a ripoff.
Yeah. And so we are trying, you'll see a bunch of new funding options in place within the next 60 days. We've been working on it for a year. We're ready to roll it out.
Cool. And Biggie Beers, I got your back, Biggie Beers. Because I too have read the Unlucky Investor's Guide to Options Trading. We will get that question done by Bat, because he is coming on after this, and I hear from producer Phil that he's waiting in the wings. But Tom, amazing stuff. Thank you for answering so many of those questions. There are loads more.
I love it.
Come tonight. Ask him yourself. Come tonight to the event. You've got the link on the show. But stay right there, because Bat's coming right up.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hey, trader friends, welcome back. We have the legendary Bat here with us. All the way from Chicago. I heard you. Yeah.
Yeah, appreciate you having me back on. I know I had to clean up a lot of the mistakes that Tom just made a moment ago, so I'm here for you, Angeline. I'm here.
Is that why you brought the dustpan and brush?
Yes.
The stuff.
Whatever I need to do.
Last night was great, eh?
Yes.
Oh my goodness! You guys brought the good weather.
Yeah, the weather's been has been awesome. Although I've heard a few people complain it's even too hot. You know how that gets. But I mean, it's been outstanding for me. It's been beautiful here.
Just a reminder of the pictures, Trader Friends, just whacking this up really quickly. This was last night at Brat and Hackney, and look at that. Whoa! There's Britt, and there's Liz, and there's Rich there, and we are drinking cold beers to try and cool down. And here we are with Sharon as well. And the main thing that was on the Twitter was, where is Bat?
Yeah, a little delayed.
Someone said, has he skived off?
I was there on time.
Sightseeing.
I was there on time.
We were there on time. We were there on time.
But you guys were a little bit early.
I think we're like, is he lost?
Probably.
Is the Uber?
It wouldn't be the first time I was lost.
Right, we got loads of questions because we have lots of trader friends dialing in and putting their questions on the page. Steve Davies, one of our trader friends and very loyal Trade Live with IG viewer, asking, Tony, do you have a favorite stock or sector to trade?
I mean, favorite is a hard word to use because they fall in and out of favor. As like Tom just mentioned ago, like oil is kind of in play right now. I never would look at oil, 6 months ago, really. So oil's more in play. For me, I like more of the Mag 7. I like liquidity. Liquidity is king for me, especially in the option trading world. So any liquid stock that has a little bit of movement to it, that's the ones that I like to trade.
Cool. We also had Bigger Beers, a question from Bigger Beers earlier on. Bigger Beers, I feel you. I too made the commitment because I met Julius Spina, who wrote the Unlucky Investor's Guide to Options Trading. I read the whole thing, and I feel like I didn't do it justice because, our jobs are like full on, right? I don't know about you, but my mind is like mush by the time I come off the show. And I feel like I need to take that book to when I'm on holiday, when I don't have so many things, but it's such a great book. What other option books is useful to gain in-depth value in options?
This is going to sound so pretentious.
No.
Yeah, no, really. I read the book too, and it's a difficult read.
It is,
it's
right?
Really...
You need lots of coffee, you need space, brain space.
You do. I found engineers really love it. So if you're of that higher learner type person, I'm more of a, okay, yeah, I'm not either. I'm more of a picture book kind of guy. So there's a good...
Dog man.
Right. There's a good picture book called, I believe it's called How to Trade Like Tom Sosnoff and Tony Batista, that a viewer actually self-published a long time ago. So it's a little bit dated, but
can
you
I
can
find it online? Can we whack that up, producer Phil?
You can get a good concept there, and I think you can find it online for free, like in a PDF or something like that. So that's what I would.
I'll try and find it.
That's why I said it was going to sound pretentious, right? I mean.
A bit of self-promotion.
No, we don't have. He self-published it, and he donates any of the proceeds, which I don't think there were many.
Is it in pictures? Tell me the title again.
How to Trade Like Tom Sosnoff and Tony Batista. The author is Antonio Rihan, R-I-H-A-N. Again, it was a long time ago. It's a little bit dated. But you'll get, you'll get.
Here we are. There you are. Whack my screen up. You can get it on Google Books.
Yeah, don't even pay for it. I mean, I know he donates the proceeds to him. I believe he still does. It was a long time ago. Yeah, 2013 was when it was published. So it's been a long time ago. But if you want an easy read, 220 pages, a lot of pictures.
I like pictures. I like pictures.
Yeah, we had nothing to do with it.
I like any book that I can read with a mojito.
Yeah, me too. I'm a visual learner. We had nothing to do with it. He did it all by himself, and I think he did a nice job.
Is Tony a tasty?
He is. He is. He's actually on the follow page too these days, so you can find him there on our Tasty Trade follow page. He was a viewer just like everybody else, just kind of absorbed it all, and then went and did his own thing. So
Nice.
Yeah.
Right. Away from number saying Angelus, but throwing a 7 was a key takeaway for me. Yeah. And I was given the hardback, which I got it assigned, and I realized I need the softback too, because the hardback's a bit
I think we
heavy
all
to carry, and the softback was like I could take it on the plane with me.
Sure. I mean, however you get to the, we all, the bartender last night made me a great drink, and then the bartender had to leave. Another bartender came in and said, that guy made a great drink. Are you gonna be able to do this? Because he was really fancy. He was swinging the
Not as fancy
jigger.
as you during the advert for the original location for.
Yeah, he gave a good running for it, but the next guy that came in wasn't quite as fancy with it, but he got the drink right and it was great. So it all depends. We all get there. It depends on how we get there. It's irrelevant at that point.
Abby Fine from Tel Aviv was meant to be coming tonight, but now is stuck because of the flight delays. Tony, American versus European options, the ability to exercise prior to expiration. However, I've not experienced any of my in-the-money positions being assigned prior to expiration. Probability?
Quite low, and especially if you follow our mechanics, which we outline on our site, and you're going to outline them on yours quickly too. We roll our trades. I know Tom got a question a moment ago about rolling trades, and rolling trades Tom didn't explain, so let me explain it to you. Usually we put on trades around 45 days before expiration, and we take them off around 21 days before expiration. And if you do that, the chance of being exercised or assigned is basically 0. But let me explain something. When an option gets exercised or assigned, your risk has not changed. It just means now you have stock instead of an option. And it might cost you more money to hold that position. That's the whole difference. But your delta, your amount of shares that you control, has not changed when you get exercised or assigned. But if you close or roll at 21 days, it takes away all the dividend risk if you're short an option. It takes all away the delta risk that you had on the position, because when you roll from one month to the next, you reduce your delta by about 30 to 50%, depending on how you roll.
Yeah. So it really depends.
All the mechanics, and again, this comes back to what I said when I was talking with Rich a moment. It comes all back to confidence. If you know that when you get assigned or exercised on a stock that it doesn't change your risk, and you have that day to get back into the option, no matter what amount of money you have in your account, all of a sudden you say, okay, it doesn't matter that I got assigned. Or
you just play it a different way.
Yep.
Yeah. So we got another question. Let's hit it up from R. Saxena. R. Saxena came to our last London event, and she brought her husband as well. She's one of our top female traders.
Awesome. We'd love to see you.
Yeah. Are you coming tonight, R. Sax? I'd love to see you. She's also really into defense stocks. Knows her stuff. Is Tasty planning to add? I've been asking for you for a long time. Is Tasty planning to add demo trading?
Yeah. We've had it.
Told it's on the list.
Say again? Yes, it is on the list, and it's high on the list. It's something that we probably should have added because the customer really wants it. And I know that I can't speak for Tasty Trade side, the brokerage side of it, the Tasty Live side of it, but I know it's something that they want to do, and I'm sure they will get it. Believe me, squeaky wheel gets the oil, so keep the questions coming like that.
There's been loads of demand for that here on the European side as well, and the UK side.
It slows down the platform a lot because you really are getting live quotes. So now all of a sudden, if you have 1 million accounts, now you have 2 million accounts with a demo account. So we've kept the speed and functionality of Tasty Trade to be number one, the fastest in the industry. Yeah. And that's really why we haven't really brought it out. So if we do bring it out, we'll have to have it on a dedicated servers and not have it part of the overall platform. So there's some technology. I'm not a technologist. I'm a color book reader. So for me, you're asking the wrong person.
Arthur Fox Haig coming up with a really, really good question, because I have asked this as well and asked them to put it on the list. Are there any plans to make Tasty functionality accessible via some kind of IG overlay tax-free spread bet wrapper? So I have put that on the list on this side because, as you know, spread betting is tax-free. So they're wondering whether the same thing can be done for Tasty?
Listen, we've been an advocate for the retail investor for a whole career, right? Since the early 80s. So yeah, of course, this is something we'd like to do. There's some regulatory issues with it, and that's really what it comes down to. I mean, when somebody asks, like, why can't we do this, or why don't we want to do this? Listen, I want to give you access to everything. Tasty Trade wants to give you access to everything, but there's some regulatory behind everything, and that's usually the stopping
reason.
block.
Yeah. Right. Eric Jones coming up as well with a very clever question. Does trading so many options to take advantage of the law of large numbers? So we talked about this with Tom earlier, right?
Yep.
Having more winners than losers, and using a very mathematical way of doing this. And really, can it really beat the buy and hold strategy?
Sure, 100%. So if you're, and you'll do a lot of back testing, and we have free back testing on Tasty Trade that you can do, and you'll see buy and hold outperform any type of like trading small and trading often kind of thing. But it's not indicative or really a great way of showing it. I'll make a quick example. You have $10,000 to invest. How many shares of a stock can you buy if the stock is trading $200-300 a share? You can't buy very many, and you're going to have a limited. Now you have an odd lot. You'll have under 100 shares of stock. Well, with options, you basically have 10 times leverage. I know in the UK you guys are used to, a couple of 100 times leverage, but we have 10 times leverage there. You can get a lot bigger with a smaller amount of options, and you always overperform. And when you start out with a 50-50 shot of stock, you can't mathematically beat out something that has a 60, 70, or 80% probability of success. Now, bull markets make geniuses out of everybody. We're basically at all-time highs.
We are.
So, it's made people very, very happy who are buying hold, and I love it. But remember, when the NASDAQ first crashed, it took about 10 or 12 years to get back to even for a buy and hold strategy. So it depends on what time and strategy you're looking at.
Yeah.
Either way, it works and it's great. But we always look at, people who, I challenge people who have, like we have IRA accounts in the US. I challenge people to tell me the name of the mutual fund that you're holding in your IRA account. You probably don't know the symbol to it or know how it's performed. And that's no way to go through life. We work so hard for the money that we make, and then we put it into an IRA account or we give it to a financial advisor, and that day they invest for you. Was that day the best day to get in? No, that day was the best day for you to get in for them. Now the markets, kind of saved you there, but that's no way to go through life. You have to know what you own, and you have to know what you're making on a percentage basis to compare it to the overall market. Otherwise, why?
Yeah, totally.
Yeah.
Quick question while we're on that, because I'm curious. Do you think currently, because markets are at all-time highs, whether or not we should be looking at signals from the oil markets generally saying they're kind of ignoring what's happening right now in the Middle East? It's kind of calmed down, right?
Yeah, it's calmed down a little bit, yeah.
Or actually, they haven't factored in enough of what mayhem could erupt out of there, if we get a situation whereby the US might take some sort of, might intervene in some way.
Right.
Do you think that markets have discounted this and we're in dangerous ground here? We're on dangerous ground.
Well, volatility in oil is probably 4 times as high as it was about 2 or 3 months ago. So is that enough? I mean, that's the $64,000 question. I don't know the answer to that. But I do know that if an option was trading at $2 a couple of months ago at X percentage out of the money, it's now trading closer to $6 or $7 or $8. Now, I don't know if that's too expensive or too cheap, but what are you going to do about it to benefit? So you have to come up with a strategy. And I think if you learn strategies, you can find with high implied volatility spreads, buying one option and selling another, call on all calls or all puts, trade a lot cheaper when volatility is high. So call spreads and put spreads are trading very cheap, and naked options are trading very expensive. So let's take advantage of that fact and then come out with a strategy that fits your assumption on the stock or the future, which way it's going to go, and benefit that way.
Nice.
How it's going to do or what it's going to do or what it was yesterday versus today, I mean, that's anybody's guess. And usually, you know, you have two opinions and they're like armpits. They both stink. So.
That's what makes a market.
That's what makes a market.
Yeah,
You're
yeah.
correct. Yeah.
And we got another question coming up from Chimpanzee Chap. As you can tell, we got lots of primates.
Yes.
On the show. How did the relationship between IG and Tasty start, and what is the future?
Well, I mean, well, IG is king, right? They own Tasty, so they bought us, and I think they found a really good underpriced stock in Tasty Trade, and I think they did a great job noticing that we were undervalued. So I mean, you know, listen, they're the owners, they're the kings, and I hope it's a long, fruitful one. It's going to be around for forever.
Yeah.
I hope they keep all the people, and they have left us alone for the last 4 years or so to build a business. I hope that continues for the next, you know, as many years as the great one upstairs allows us to be here. So
yeah, and we can keep bringing fine products to you, lovely people.
Yeah.
Let's end with a fun one. From Abby Feiningen. Where can we see Vanessa perform stand-up live? I love Vanessa. I love Vanessa.
Yeah.
And she goes to these like cool gigs, and she drives a motorbike, and she does these crazy zip wire.
yeah,
Yeah.
skis.
Oh my goodness.
Climbs icebergs. I mean, she's
Climbed an iceberg?
yeah. She's a risk taker. A
also
lot
a
more than Tom and I guess.
She's also a huge Tay-Tay fan. Flew
Yes.
all the way to Germany.
Yes.
Wow.
Yeah.
That's commitment.
Yeah, that is commitment. You know, we had 5 or 6 comedians that started Tasty Trade 14, 15 years ago.
Yeah, Tom was saying, yeah.
Yeah, to make fun of traditional news like CNBC or Bloomberg or something like that. And she's the only one that's left out of them. So she is the strong survivor, and she's very good at what she does. And you can find her around Chicago. I don't think she's really an introvert, believe it or not. She's not an extrovert.
I loved her desk.
Yeah.
You know, when I went there,
She had all her pink stuff up.
you knew it was Vanessa's desk
Yes, you did.
before
Yes,
you
you did.
even like got there.
Yeah.
And Ange was like kind of slightly jet lagged, and you know, came into the office and was like, I know that's Vanessa's desk.
Yeah, funny. You can tell right away.
Yeah. I was in before the reception, so I felt like I was kind of breaking in to your
I'll
office.
come film her one day and I'll put it out on Twitter, or we'll bring it on
Yeah.
on the Tasty site
Yeah.
somewhere. Yeah.
She's got great energy, Vanessa.
she does.
And she also, I asked her for a big favor, please, big shout out to Vanessa. I said, can you please, since I was starting the show with Frank, send us, what you work on the night before? And that just gives us, a leg up, and she's done so ever since till today. It's great.
Yeah, she's a great team player.
Right, we gotta go because we have more coming up. Producer Phil, what's coming up next? We've got more of the Batista, this time with the McDonald, and with Nick Batista.
Oh, awesome, my son. Beautiful.
Yeah, don't worry, you weren't being replaced.
That's okay. It's okay. We got to get younger somehow.
Please slam the like and subscribe button. We try to get all of your questions in. I know there are about 100 left.
Awesome.
Keep them coming in because I'll get them asked for you. If not here, but then tonight, do come and ask them yourselves. Come to the event. All right, we'll see you right after this.
Thank you.
Welcome back, everybody. In this series of interviewing the Tasty Stars, I've had the pleasure of speaking to Tom Sosnoff, Dr. Jim Schultz, and the legendary Tony Batista. Now, in that interview, we did discuss that the sequel is never quite as good as the original. However, in this case, I think it's more of an upgrade. Welcome to the show, Nick Batista.
Thank you for having me, Rich. I appreciate it. I'm excited to talk with you.
Oh, I'm very excited this end as well. So I guess, the first question we've been really asking everybody is, how did you get into trading in the first place? Was it, the sort of fatherly influence? Was that the discussions at the dinner table? Or was it something that you naturally found a passion for already?
It's funny because growing up, it was it was really hard to understand what my dad did for a living. I always thought he just he went to work, and my idea was that he was just screaming all day, because he would talk about how, you know, he would come home and his voice would be hoarse and whatnot. So I always thought that he was a professional screamer. So I really didn't understand what trading was until I got a little bit older. And, you know, I was always interested in finance and in business and math. I was always on the math side of things for my school studies. And so it was a pretty natural progression. But, you know, to say that I knew what trading was when I was younger, it would be completely untrue. It's one of those things where it's not often taught in school. There's no option playbook. There's no option related class. It's always just an investing type situation where they tell you, you know, buy stocks for 10 years or 20 years or something like that. There's really nothing that teaches you.
At least you get that. We don't even get that on this side of the pond.
Yeah, exactly. I mean, it's one of those things that's really, really hard and that isn't readily available to people. So for me, starting off with Tasty and how I got into this was really looking for opportunities and starting at the ground level. I mean, when we started Tasty, it was a completely different company than what it is now. And for me, you know, I wanted to follow in my dad's footsteps, and I was interested in what they were doing, and I saw the opportunities. And, you know, it was one of those things where I just started at the, you know, very novice level and worked my way up into the trader that I am now.
And so when did you actually start at Tasty then, and how long did it take until you were on the screen?
So when I was originally hired, Christy Ross, who was the CEO at the time, she pulled me in the office and she was like, you know, we're excited to have you, and you know, I'm excited to get you familiar with trading and the content side, and we're gonna put you on air next week. And so my first day at Tasty, they told me, and that, you know, when I was hired just to be, you know, on the support side and just kind of, you know, at that time we were very much a startup, so everybody did a little bit of everything all over the place. And I was excited for the opportunity to get on camera, but I was certainly a little bit apprehensive and you know, not ready for the big lights. But that's the way we do it here, man. It's trial by fire, and it's throwing things at the wall and seeing what sticks. And I think that's kind of what happened with me when I started, was that, you know, the content wasn't as good as it is now, certainly, but that's how you have to start. You have to throw something at the wall and see if it sticks, and grow with the content through the experience of it. So that was really how I first started, was just kind of getting thrown on the show and learning as I go.
It is funny. You look back to the Tasty YouTube, and there's a video from 12 years ago, and it's of your father. And literally, it's as if I'm speaking to that person right now in front of me. You know, to say that you look alike, there's certainly no question that you're adopted anyway.
Yes, no, they always say, you know, your mother. The father you can't always be so sure of. The mother can't fake it, but I think Tony is my dad. I'm pretty sure of that.
Yeah. Now, what about, you know, going back to the first day? So that was your first time on screen. What about before that? Had you ever found yourself in the limelight or on stage in your school days, for example?
And not necessarily. I mean, my first job out of college was in a finance related field. I worked in credit markets and debt, and so I was familiar with the basics of trading and the basics of financial markets. But prior to that, I really had no experience, you know, on camera, and even in those days, not to date myself here, you know, the social media aspect wasn't really part of the game, right? It was still, you know, the early days of iPhones, and, you know, Instagram was just getting launched. It was still Facebook and those sort of things. So there really wasn't anything.
What about,
there was no practice I had going into it.
What about back at school, like, you know, drama? Did you take place in school shows and things like that?
Nope. It was completely a fresh start for me. But you know, I had always been
to show you one of these, Nick.
Well, I don't know what is it.
That's a kazoo.
A kazoo. There you go.
Because your father told us a story about one time that you were on stage at school.
Okay.
And you had misplaced your musical instrument, so you just went and stood on stage. So I decided to get you this as a gift.
Thank you.
And I'm going to give it to your father when he's across in London.
I appreciate that. And it was actually a recorder. So
Right.
it was the first instrument that we would play. I think this was like maybe like 3rd, 4th, 5th grade, something very early on. And so yes, my official first time on stage was certainly a fail. If we're counting that as the first time on stage.
But you still got up there. I think that was what your dad was so proud of. He's like, all right, he hasn't got his instrument, but he's not shy.
Yes, I was never shy. Certainly not.
Now, what's one piece of advice that your father's given you about markets that has really kept you, on track and the right way? And then maybe one bit of advice that wasn't so useful or accurate.
I think, the one thing that my dad has taught me throughout my trading career is just to not be afraid of taking risk. I think that's the hardest thing for people to get over, is the aspect of, not every trade is going to be a winning trade, and not every, situation that you're in is going to be a good situation for your portfolio. And I think putting risk on is really the hardest. Clicking the button is always the first step, and it's the hardest one for people to do. They overanalyze things. You read an article or you see something in the news and you think something, or that somebody else knows something that you don't know. Those are the things that go through everybody's mind. And for me, I think the point that really pushed me forward was understanding that, there's no reward without the risk. There's no risk-free trade. And so, my dad really taught me and pushed me to put risk on, and to put your idea out there, and to put your trade on. And sometimes they're going to be losing trades, and a lot of the time they're going to be winning trades, but you have to put risk on to really move forward with trading. And so I think that was one of the biggest keys for me. In terms of something that didn't work, I would say that sticking to not having your own ideas about trading. I think we get stuck in kind of our tasty vacuum of mechanics, which are awesome, but at the end of the day, you have to have your own risk tolerance and your own directional assumptions and your own thoughts about markets. And so I think a lot of that, we get in a little bit of an echo chamber. We're all kind of the same traders. And so listening to other people can sometimes lead you astray if you don't have that same sort of opinion.
And what about trading stock? My background was an equities trader, market maker. What about just the basic trading stock as opposed to options? Is that part of your trading life, or is it mostly options?
I think the option market has really broadened out my outlook on investing and trading in itself as well. Options allow you so much flexibility to leverage and to size your positions much more efficiently than just stock. Like, it's one thing to buy 1 share of NVIDIA or 10 or 100 shares of NVIDIA, but to use options to get that same sort of exposure is so much more capital efficient. And so in my own personal trading, whether it be IRA accounts, a Roth and traditional IRA accounts, or my own personal money, I use options to leverage my, that know-how in options to leverage stock positions. And I think that's really, something that is really powerful, and especially for people that are on the younger side. And I know I've got lots of gray hair now, turning into the old Tony Batista here. but I think for people that understand options, it allows you a lot more flexibility and a lot more leverage to put positions on versus stock, which is just so capital intensive. And so I think through all my learning here, it's allowed me to kind of to leverage up that know-how.
And you mentioned, back in your early years, your school days, it was kind of hard to understand this job that your dad was doing.
Yeah.
If you were speaking to somebody now that found the options market difficult, whether it be a 12-year-old, a 25-year-old, or a 60-year-old, a lot of our viewers haven't yet made the jump from trading stocks to trading options. How would you describe the options world to them in a basic level of explanation?
Well, I think now the access to information is so quick and is so accessible that it's much easier to start now than when I started. When I started, there weren't, I was reading Shelley Natenberg's, Option Pricing and Volatility. It's a great read, but it's very, very dry and it's not very engaging. And now you have access to all sorts of information at your fingertips in the computer that you carry in your pocket. So I think that is a huge benefit to people just starting off. I think the easiest way to describe options, or at least get somebody started with options, is to explain that options are a small way to get exposure to something very big, right? So options, you can build option positions for a couple $100 in risk. And I know that everybody has their own risk tolerance, but from a size perspective, options allow you to get small. You can also get large with those positions as well. But really, the flexibility of options to build positions and size positions appropriately is something that's a lot more attractive than just buying stock. Like if I tell you that you can make $100 on being long NVIDIA, if you're buying 10 shares, you have to have NVIDIA go up 10% to make $100. You can make trades that have a similar sort of risk or use a similar amount of capital and benefit much more quickly from that sort of assumption using options. And so I think just the leverage aspect and the sizing aspect of options is really what's the most attractive part of trading.
And, a great strategy for a beginner, of course, is defined risk.
Yeah.
What would you say your favorite defined risk strategy is that you find yourself using time after time?
So for somebody just starting off, I start with put spreads, right? Just selling short put spreads. See, it's the most, most people are comfortable being long a stock. They say, I want to be long NVIDIA. What's a good way to be long NVIDIA? And I start with put spreads. I think that's the easiest way to start off and get exposure. For me, with a little bit higher risk tolerance, a little bit more directional assumptions, using diagonal spreads are an interesting way to get long a stock. Poor man's cover calls. These are ways that you can leverage option know-how to build more capital efficient positions. It's very capital intensive to buy 100 shares of NVIDIA and watch it move 10 or 20 cents a day or $1 a day. It's just not, it's not a good use of my capital. And so building a poor man's cover call or a diagonal spread, those are the ways that I like to participate in stock trading.
And then would you say that's developed over your time on screen and at Tasty?
I think so. I mean, of course, the hardest part is clicking the button, and I've mentioned that before. And once you start to take risk, it gets progressively easier to take that same sort of risk, right? So once the repetition of trading and the understanding of trading, and not just the understanding of like why a stock is moving, but the things that you can control about your trades, looking at volatility, understanding time, understanding some of the other more intricate Greeks like gamma or rho when interest rates change. All those things kind of get easier to understand, and you get more comfortable with them the more that you're able to put out risk. And I think as people trade, and as somebody starting off, gets more and more positions on, those things you become more comfortable with all those things, and trading itself becomes a lot more comfortable.
Great. Now, talking about being comfortable, you've got your own show now, haven't you? Options Trading Concepts, and walk us through what you cover in that show.
So Mike and I, we try to take higher level content and condense it down into a more simple understanding. So we take a lot of the strategies, concepts, trade ideas, all those things, and cover them throughout the week. We've started to incorporate a lot of special guests. So we try to cover a wide range of concepts, from FX markets to, commodities and futures. We have Ryan on for crypto, 3 trade ideas with Katie. So we try to cover a broad range of topics and concepts and make them a little bit more easy to understand for those starting off. So I would say the range of content is very, very wide, from novice to advanced, but we try to condense it down and make it digestible for the viewers. And of course, the aspect of live trading is a huge part of our content. We're making multiple trades a day, every single day, no matter what's happening in the markets. That's always going to be a part of our content.
And what do you prefer more? Do you prefer the trading side? Do you prefer the on-screen side? Or is it a combination of them both?
I think it's got to be the trading side. I mean, I love trading. I love taking risk. I love analyzing markets and looking at volatility and trying to find opportunities and taking, ideas from our chat and from Twitter and from people that email in, and building off of those assumptions and just building that small little trading community that we have. That's a huge part of my show. I mean, I've covered a lot of the topics in trading. Iron condors, I've done it 1,000 times, but when the concept doesn't change. I think that's the hardest part for people to understand. And when they start trading, they think their iron condor is different than something I've covered 100 times. The concepts are all the same. It's the execution and the emotions and the things that you're trading around day to day that change. And I think that's, a huge part of our trading, is looking at our own trades, looking at trade ideas that we get from various sources, and showing how those things are moving and changing to the market right now versus the basic concept of what is an iron condor or what is a short put. Those things are static.
And that kind of mindset, what do you think sets it apart from the likes of sports betting, for example? Do you love also getting into the companies and having specific views on companies, or is it just math?
I think it's hard. The math part of it is the thing that we can trade around, right? So the company specific, price PE ratios, new products, events, those things are binary, and the reflection of the stock movement is not necessarily what you would think from those sort of binary events, right? So Apple reports earnings and beats all their numbers, but the stock goes down. What does that mean? Does that mean that, they're not good numbers actually, even though they are good numbers? Those things are random. The math side of trading is not random. We can trade volatility, and we could sell volatility when it's high. We can buy it when it's low. We know about time decay, right? As time passes, value decays. And so these are things that we can actually trade around. I can't trade around the reaction to Apple's earnings directly, right? I can make an assumption about changes in volatility and changes in time. Those are things that I can make assumptions on, but the actual stock itself is going to do what it's going to do. So I think incorporating and using the analytics side of trading, the PE ratios or events or products, whatever, those things are great things to incorporate into trading, but they're not necessarily my focus day to day.
I think that's what became obvious to me. I've traded options for 18 years, but I've never really understood options until I discovered Tasty. And first of all, playing around with the platform, right, getting ready to it, because it can be a little bit intimidating. But, you know, that took me 5-6 hours. But actually learning the mechanics and spending time with Sosnoff and listening to your father, I started to really get it. And my goodness, your P&L suddenly changes when you start to understand it. And it's really exciting. So, you know, this great thing that you guys are doing a TV show that is helping people not only really understand what they're trading, but helping them to increase their probabilities of making money and losing less money. You know, it must be such an exciting thing to be part of.
It's awesome. I mean, I love putting the names to faces. I think that's the one of the most rewarding parts of what we do here when we do our live events, and somebody comes up to me and tells me their YouTube handle, and I recognize it from our daily chats and the emails. You know, I've emailed with people for years, for 5, 6, 7 years, back and forth, just, you know, on all sorts of things, on, you know, food places that I should, you know, restaurants I should go to in whatever city I'm going to next, to trade ideas, to current events, to politics. I mean, these are it's almost like friends. You know, we've built this sort of network of like-minded people, of traders, of friends, and that's really an awesome part of this business is putting those names to faces in those live events and Twitter and all those other social medias that we use throughout the day here.
It is funny because we're building up a fantastic community on our own show in London now, and you recognize all the names, you recognize when there's a new name, but you also notice when somebody's not there, or if they've disappeared for a few days, you know, you start to think, I hope they're okay, maybe they're on holiday. So yeah, I can definitely, you know, get that kind of feeling as well.
And that only gets bigger. You know, when we started, this was a small operation, and, you know, that's how we've always grown, is through word of mouth and building this sort of community. It's never, you know, it's never it's always organic. It's never, you know, a forceful type thing. You know, if you don't like the content, you don't watch. But people like the content and they tell friends, and those people, you know, it snowballs into a bigger and bigger community.
Yeah, and of course, as we know, there's Tony and your father. Tom, your father, and JJ, Scott Sheridan. So I would say, you know, they're maybe the OGs, but now as director of trading content, you're building up a new, you know, how would you describe yourself?
Next gen.
Next gen. Yeah.
Of course. I mean, you know, the trading hasn't changed and will never change. You know, there will always be stock trading. There will always be buyers and sellers. There will always be markets. And so, you know, the content will continue on, whether it's Tom and Tony or Nick and Mike or Chris and Ilya or any of the, or Rich coming on. I mean, this will always go on, and markets will always be here. And so there's always going to be something to talk about in markets. And so I'm excited for the future, and we're building, you know, we have so many new hosts over the last couple years that we've brought on. And so, you know, the future of Tasty is brighter than ever. We're going to have more people, more shows, more content, you know, more things to trade. The trading space is only getting bigger. So it's going to be awesome.
Do you ever think what you would be doing if you hadn't come into Tasty?
Oh man, I've done a lot of different things. I mean, I worked in credit and debt markets. I sold cars when I was in college, so I was a pretty good salesman. But this was the perfect spot for me. I mean, it's the perfect blend of risk and sales and technology. I mean, there is so much that goes into this business that, I couldn't imagine it. And really the best part is that every day it's different. You come in the markets, there's something moving, there's a new stock on the board, there's an IPO, there's a new technology, crypto, there's all sorts of things that happen.
Man and the president are exchanging.
It's the greatest thing. I couldn't imagine coming in every day and punching a time clock and doing the same thing over and over and over again. That the fact that every day is different and there's new opportunities every single day, I couldn't ask for anything better.
And if we are looking forward 5 years, 6 years, 8 years, what would be your target? What would be the aim of where Tasty and Tasty IG would be sitting in that future?
I mean, I think the content will continue forever. That goes to the fact that markets are always moving. There's always some sort of opportunity, and everybody wants to be in on that opportunity. So I think the content moves forward forever. I think for us, really, the biggest key is to continuing to build technology and provide tools to people that aren't available now, and just continuing to broaden the access of trading and the technology and the research and the content and the know-how. Those things are how we continue to get better and better through the next 5 years, 10 years, 20 years from now.
Excellent. Now, before we go, please take this opportunity to give the show a plug. When can people find you? And we'll do the time difference so they can listen in from London.
You can find me daily, 11 to 12 Central Standard Time. And that's every single day. On Wednesdays, I'm on in the morning at 9:30 a.m. with Tom and Tony for Johnny Trades. If you're just starting off, you can check out that segment for some quick trade ideas.
Just explain that one for a second, because that really is a cracker.
Sure. So Johnny Trades is a somewhat, it's a Saws and Assault type name, right? It's kind of a compliment, kind of an insult. But for those of us that are just starting off trading, maybe you just got a couple $1,000 that you want to trade around just to start learning how to trade. Those of us that are taking small trades, right? Not everybody can take the big risk that Tom can take. That's what our segment is, or my segment is about. Johnny Trades is for those smaller type, newer traders, a reasonable amount of risk while getting started in option trading.
Great. So that's 9:30 Wednesdays?
On Wednesday mornings, yes.
So that's 3:30 p.m. London time. And then you're on every night at what will be 6 p.m. London time, I believe, on the Tasty Network.
Perfect thing to watch while you're eating dinner. Couldn't think of anything
better. It really
better.
is. And then by the time that Saws and your father come on, it's 8:30 p.m. here. So it's usually nice little glass of wine just as the market's
bedtime story. It's perfect.
Oh, can you think of anything worse? Well, you're the one who knows for real.
It's true.
Nick, thank you so much for joining us. Absolute pleasure to have you on Trade Live with IG. And we look forward to some point in the London when Saws and your father maybe aren't fancying a live show in London like they are coming up soon. Get your tickets now on Eventbrite. Sign up for the 20th of June. We're going to be showing this just before your dad and Tom are live on stage in London. But yeah, might we be seeing you across here at some point in the future?
I hope so. I plan on it.
Good stuff. Well, you've got my personal invite there. You and I can do the next generation show.
There you go, Rich. I'm with you.
Good stuff, Nick. Thank you. Have a good day.
Thank you very much, Rich.
The Fed holds, and so do markets. It's Wednesday, June 18th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Glenn Freiberger in Chicago. Welcome. Thanks for stepping in for Dylan today. He's getting ready to take Tom and Tony around Europe, which should be a lot of fun. We're here for the next hour as we take you through the futures market close, 5 p.m. Eastern, 4 Central. If you're joining us on the platform, tastylive.com. Welcome. Thanks for joining us. Come over to YouTube. Tell us what you're trading today, what you think of this market action. Before we get there, of course, I think it's worthy to remind everyone the futures market is still open right now. And if you have any last-minute trades you like to get across the board, now is the time to do them, or you hold your peace through tomorrow because, of course, the market's closed tomorrow for Juneteenth federal holiday. When we see the futures close today at 5 p.m., it's basically like a Friday close, and then tomorrow is effectively a Sunday open, where we'll be back again trading at 6 p.m. It's why we warned that if you had dividend-affected positions today or for Friday, you should roll them today. Okay, so that's all off the board, guys. The Fed kept rates on hold. That was not a surprise. 99+% chance of them doing so, according to Fed Funds futures spreads. Going into today's meeting, the policy statement itself did not change either. Outside of the date and maybe changing a name here or there, the red line was boring. The same we saw in May. Very boring. But what we did see was a change in that summary of economic projections. We see that the Fed is cutting their growth forecast. They're boosting their inflation forecast. They're telling us that we're still going to get 2 cuts for this year, but ultimately maybe not so much more in the future. They are forecasting a higher structural Fed funds rate, a higher for longer, if you will. Stocks don't love it, nor do they hate it. Neither do bonds. It's a flat day right now. S&P is now flat for the session, 0%. NASDAQ's off by 0.01. Russell is the only significant outperformer, up by 0.56% here. Ilya, because you and I just had a chance to talk on last call for a bit, I just want to kick it over to Glenn here for some thoughts. Please. Glenn, you know, this is a big day for us, particularly for FX people like yourself.
Oh, yeah.
We care about the central banks, and I don't know if this one left much of an impression. How are you seeing things from your side of the desk?
Yeah, I mean,
what's happened today?
I mean, if you set the backdrop for me this morning, war, FOMC, random holiday coming into the middle of the week, I would have expected things to be a lot more exciting. And even so, one of my predictions for this day, how it would unfold, is with getting the summary of economic projections, getting a lot more numbers on the release of the meeting, I would have thought the move, and knowing how cautious Powell tends to be and everyone kind of expecting what he's going to say at this point, would have thought the move would have been at the 2 p.m. Eastern time, at the release of all of those economic projections, all those new numbers. And we saw kind of a muted reaction there, and the slide coming actually during Powell's commentary, which I thought for this occasion would have been reversed. So that surprised me a little bit, but inside moves all around, tracking dollar prices. We did see a little bit of dollar strength come back. The snap reaction was dollar weakness, as you know, the 2 cuts taking the headline there. A lot of people thought that they would edit the dot plot to perhaps just 1 cut this year. And so an initial dovish reaction, but once Powell got on the mic and started saying, the rhetoric around the inflation costs will be passed to someone, we don't know who, we all know who. But then we saw the dollar start to get bid up. A lot of that tension release in pairs like the euro dollar and pound dollar that were pretty wound up beforehand, and even some more back and forth in the Australian dollar and Japanese yen, who were moving, trending in the dollar's favor, or not in the dollar's favor leading up to the meeting, and now coming back a little bit. So a little bit of diverse price action from a charts perspective, but pretty unanimous across the board. Dollar story starting to get a little dollar bid.
Ilya, it seems like the dollar is coming back here a little bit. I'm just flipping through some of the spot FX positions on the chart, and you can see that once you get that initial shakeout where the dollar softens up a touch with the release of the policy statement, and realistically, it's the summary of economic projections that get it moving, given the lack of changes. The dollar does make its comeback as Powell begins to speak. And, you get the sense right now that at the margins, the news flow, the tariffs, the geopolitics of it all, it puts the Fed in a position where it does need to continue to wait to see if the timing is right. Ilya, I can't help but reconcile the fact that 2Q GDP, even if it's just for accounting purposes, is going to be much stronger than what we saw than in Q1. And so the Fed is probably not going to have the ammunition in its back pocket of a recession by July, right? Because the July meeting, right, to say whether or not they should start cutting. It seems like the Fed is going to be sticking around in its current location for a while longer than probably people want it to, than it would like to, but its hands are tied right now.
Yeah, and I don't think currency markets are particularly surprised by that, or we'd see the dollar strengthen more considerably. I think when you look at really what's happened, if we can just zoom back here, this is a 5-minute chart that we're looking at. If we go to a daily for the yen, if we go to anything a little bit longer term, we can see that the dollar has been facing relentless selling since the beginning of the year. We saw that, of course, in April. We had the whole scare at the beginning of the month with Liberation Day. And against that backdrop, once that sort of normalized a little, we saw the dollar strengthen a tad and then come right back in and establish a kind of sideways consolidation. If we look at the yen, similar story in the euro, similar story in the pound, really stubborn consolidation with almost no motion at all in the Aussie. But whereas stocks have clearly recovered off those April lows, the dollar has not really managed it. And so one of the more interesting things here has been this sort of relentless bearishness on the dollar in markets. It doesn't really seem like that bearishness has a very concrete argument to unravel on the basis of what the Fed said today, because as we were just saying on last call, the only kind of notable change in the SCP, everything else was very predictable, right? The Fed signaled already as recently as May, we're going to increase the unemployment rate forecast. We're going to lower the growth forecast. We're going to increase the inflation forecast. That's exactly what happened here. We're going to widen the bands around those forecasts because uncertainty has increased. We really have no idea what's going on. All we're saying is we know tariffs historically are going to have these effects.
Did you find that to be, I saw that uncertainty, and we measure uncertainty as the bands around the forecast widening out. The Fed says here, uncertainty about the economic outlook has diminished.
Yeah, what the heck?
But remains.
I mean, I think you look at the S&P 500 and you hear what Powell says, and he goes, well, since April, it's diminished. Well, yeah. yeah. Since April, it's diminished.
Thank goodness.
Can I say that I just sat and listened to the whole meeting? And then halfway through, I started playing it back from the beginning while I was listening in one channel, and then I had it on mute on the other because I think watching Powell's body language is an interesting enough exercise. Yeah. I walked away thinking that the Fed has no clue what's going on right now.
They're saying as much. They are loudly saying, "Hey, look, with an unemployment rate at 4.2 and an inflation rate at 2.4, why in the world would we try to make up our mind now?" Well, it's going to take time for the tariffs to work their way through the economy. But the upshot, again, dollar-wise, yields-wise, I think is the market is very much not on the Fed's page when it comes to this change in the rates forecast, where they went and dropped the rate cut from 2026. The market is flipped the other way. They think we get the 2 this year, and then we get more easing next year, not less. As that speculation builds, it'll be tough for the dollar to go up in a lasting way. It'll be tough for bonds to stay anchored.
I just realized this is not the correct. That's the correct one. Not sure why I pulled up last year's. Okay, so one thing that I noted here in the language too, the unemployment rate remains low. They changed from has stabilized at a low level in recent months. So low to the Fed is basically below 5%. But what we should be aware of is in the most recent non-farm payrolls report, the unemployment rate was technically 4.244%, which means if it was 4.245%, it would have been rounded up to 4.25%, which means it would have been rounded up to 4.3%. So like just by the skin of our teeth did we miss seeing an unemployment rate miss last time. So if there is something the Fed's getting ahead of right now, there is this slight adjustment in my read through that the uncertainty persists because the situation's degrading. It's not falling off a cliff right now, but we're kind of gliding into a less comfortable economic environment moving forward because growth is revised lower again, unemployment's higher, inflation's higher. That's not stagflation itself, but it smells stagflationary. You don't technically have high unemployment, you don't have negative growth, you don't have high inflation, but lower growth, higher unemployment, higher inflation. That's not a fantastic mix right now for sentiment. But sentiment's really bad in this market already, Ilya. I want to stick with the dollar here for a second because the dollar sentiment just kind of drives me up the wall for the most part. The action today, the dollar was lower. It does resolve itself to the upside. You can see that we're now testing the downtrend from the February, March, May, and perhaps now June swing highs here. The Bank of America Global Fund Manager Survey, which was released yesterday, shows that fund managers have not been this bearish on the US dollar since January 2005. We know from the futures market, the euro positioning is the most net long it's been over the past year. We know that the yen positioning is basically the most net long that it's ever been. We can just go down the list. The pound's in a similar situation. The Canadian dollar's in a similar situation. The dollar is really stretched. Glenn, how are you feeling about the greenback here? Because it feels like it's the most hated asset in the world right now.
I know, what the heck?
But that's probably a good opportunity for contrarians like ourselves to look long.
I agree. And the one thing you're pulling up here, DXY, to me, what screams out in the spot Forex market is if you're stuck looking at a chart like this, where you're saying it might break out of its bearish trend, you have a lot of unique chart patterns in these markets and a lot of opportunity to catch the dollar, regardless of if you are continually bearish or are betting on a dollar comeback. You have a lot of different charts to try and get in here on, and a lot of unique price points. So that's, in terms of unpacking the dollar story right now for me, I think that's the most interesting angle. I mean, you have the euro dollar at coming off of 4-year highs. You have dollar Swiss franc seemingly pinned at 10-year lows, but now starting to build some positive price action there. Just now in the hour after the Fed meeting, now returning to levels in that market that we saw last Thursday. That had been a significant laggard, a lot of pressure getting relieved in that market. And so I think maybe it's just me who's looking at these markets a little more than the average trader, but there's a lot more granularity and potential opportunity when looking at the spot dollar markets than the dollar index, because that's a pretty disheartening story overall, just putting the dollar in a basket and checking the year-to-date performance. So that's what I'm looking at. I've got some client sentiment from tastyfx, IG group clients, and that shows us that this dollar Swiss franc market, let's get in here in my, just hitting a refresh for you so I can get the most recent numbers. This dollar Swiss franc market, we've got client sentiment of 82% long. So that aggregates IG group exposure across the whole globe, and traders positioned. And what you're seeing is traders in the dollar yen market now split 50-50 at this 145 level. You're seeing euro dollar and pound dollar both net short to the tune of 60% net short, and then Australian dollar and US dollar, Canadian dollar both net long. So you're seeing a little bit of mixed positioning when you get that granular, as opposed to just one of the what did you say, the Bank of America fund managers. So it's
actually
just
very interesting, very interesting numbers, because to your point, Chris, and yours, Glenn, the 80-20 split net long in a dollar Swiss would tell you you're getting to the kind of a place. And by the way, we should kind of preface this by saying retail sentiment tends to be a contrarian indicator. So what you tend to see is when a market builds net long, that market tends to be going down. That tends to be a bearish signal.
Can we explain? Do you mind if I explain why that's the case? Because
I think
not
it's very
that
important to explain why that's the case. Because it's not that people are wrong. That isn't what that's telling you.
Yes, right. So when we look to sentiment figures for retail traders, right, just as we would look for positioning for the COT report. So let's go backfill here a layer further. The COT report, the CFTC's Commitment of Traders report, is released once a week on Fridays at 3:30 p.m. Eastern. It covers the trading week from a Wednesday to a Tuesday. So the next COT report that we see will be the week through yesterday's close, for example. But that leads to a little bit of a problem, because you get the COT report on Friday and the data window closes on Tuesday. So market action Wednesday, Thursday, Friday morning, it's not accounted for in these positioning updates. Okay, then you have to wait another week. So what happens around the Fed today, for example, what happened with the positioning in the market with the Israel war starting with Iran, we're not going to actually see that until this Friday, even though the war's been going on for basically 6, now almost 7 days. So years ago was contrived. We got to find a more timely positioning indicator. We got to come up with a way to mimic the CFTC COT report, and we got to do it on a real-time basis, right? So we can look to our own client positioning to do so. And in doing these data studies, something interesting occurred. We've talked about this on air before, Ilya, but for the most part, if we were to just do a binary, were you right or were you wrong, retail traders themselves are actually correct more than they are incorrect. The problem comes because of scaling with risk management, where if you're right 55% of the time, but your average loss is twice the size of your winner, you're going to actually lose money, because you need to have a break-even rate of 2 to 1 if you're going to be wrong. Excuse me, if you're going to let your losers run twice as long as your winners. So you need to be right 67% of the time if you're going to let your losers be twice the size of your winners. And that obviously is not what happens here. So why do we look to the sentiment figures? Because when you see these extremes in sentiment, you could trade off of them. Granted, retail traders are usually right. Okay? They're usually directionally correct. It's because of the risk management and the inability to cut losers and let winners run that you see that they're offsides. And what makes this all the more interesting is when you look at the sentiment data and put it next to something like the COT report itself, you could see that retail traders behave specifically like speculators in the futures market, right? Which is to say that they follow trends, and at the tops, they try to fade them, and at the bottoms, they try to pick the bottom. So there's something to work with here. It's a tool that we use to help fill in the gap, because the COT report and other positioning data available in the market isn't updated on a day-to-day or even a minute-to-minute basis. My spiel's over.
Right, but so what, and a very important spiel it is, because first of all, it illustrates why all of us, when we start in trading, have to overcome, most importantly, the risk management side of things, because that really is what makes you successful or not. There's a gazillion ways to analyze markets across different time frames, but if you can't manage risk, then you can't make money over time. But it also illustrates how to read these numbers in the context of sort of their directional implication. You see in reading like 80-20 net long in dollar Swiss, and you go, okay, well, that's getting kind of high. that's getting to the point where you're getting near a positioning extreme. And although on the way into 80%, from 60, from 50, as you're growing net long, the implication would be that the bias is in the opposite direction, that a trend would continue to build in the opposite direction. So if retail is increasingly becoming net long, then the price is increasingly going down. At 80, you're getting to a place where sentiment might be at enough of an extreme where it actually flips. And at that point of exhaustion, people would start getting less net long. But of course, then the price would also be signaling that it's likely to go higher. You interestingly don't have that split, to Glenn's point about the diversity of what the dollar is doing. You don't have similar splits in the yen where you're at 50-50. It's not nearly as extreme in the euro where you're at 50-60, something like that. So the dollar here isn't obviously screaming that it's at a point of exhaustion on the down move. And when you look at the levels, I mean, just look at the pound here ahead of the Bank of England policy announcement here coming up in just a matter of hours. We're sitting squarely at former resistance turn support, and we will not clear it. It's a similar story in the euro. It's a similar story in the yen. The Aussie has basically been stuck in the mud for ages now, so it's difficult to even put levels on it. But all of this basically lines up to, we've gotten to the bottom of the range, we've gotten to the deciding line, and we're going to either crack or bounce here. We've been in a sideways range for quite a while now, and that can relieve positioning all by itself. So when you look at something like the Bank of America numbers, and if you then end up saying, you know what, people have sold off some of their short exposure, but the price has only moved sideways and not up on that basis, that's very much a possibility to relieve some of these oversold levels without the dollar necessarily rallying.
I would look to today's candlestick in the pound as perhaps a sign that this thing is rolling over and the dollar's getting ready to rebound before we move off of FX and go back to the broader market. But you can see that the high today bumps into the 5 and the 21 EMAs, the 1 week and the 1 month respectively. Mm-hmm. We kind of break the downside of the trading range here. I go to that 4 hour, right? We clear out the lowest close.
Very possible.
So that's the lowest close on the 4 hour on the 10th. We try to rally back into there, rejection, and then ultimately set a new low. The point is that the dollar has been beaten down. Everyone hates it. The founder of this network fashions himself a contrarian, and for the life of me, I am not that person. I'm a momentum guy. I'm the kind of guy who likes to look at a trend and go fishing and not think. Okay, it's very the kiss method. Keep it simple, stupid. But
you're starting to see that here.
The momentum looks like it's turned. And I think that's the prevailing point, if only as a point of interest. Look at MACD. MACD has not set itself down below its signal line with a sell signal going back to the start of April. And that was a temporary blip. Otherwise, for the majority of this uptrend that the pound's been in, that the Aussie's been in, that the euro's been in, you've seen these indicators stay in bullish territory. And they're starting to give indications that maybe those characteristics that have defined the past several months of trading, they're evolving. We do need to go, Glenn, I do want you to have the last word here on FX before we change the channel and go back over into equity markets.
Yeah, I mean, you nailed it there with the nice part about this dollar story is you had such an extreme run-up that if you're looking and possibly think that things are turning over and a dollar comeback is underway, you have time to and a lot of room to run to wait for confirmation if you see it, because it's not like a typical year where within a year you only have 5% to work with. I mean, especially against European currencies, these are up 10% already. So I think as much as these markets are wait and see, just like the Fed, if you are a dollar bull, you've got a lot of room to run. So I'd say no need to necessarily try to step in front of it, but it's nice to see a little more two-sided action.
Ryan, why don't we pull up, or Paul, why don't we pull up the slide here? Before we get off of FX, I think it's a timely reminder for everyone that tastyfx is now on the platform. You saw us tinkering down there when we moved through the tabs, but you can trade SpotFX now in the same place as everything else. If you go to tastyfx, or you head over to the watch list on the platform and you go over to Forex, you have the ability to sign up from there directly. Head over to tastylive.com, tastytrade.com, Glenn, tastyfx to find out more, right?
And there you go. You nailed it.
We nailed it. All right, let's go back to the charts here. Let's talk about what's happening broadly in the markets. We haven't looked at the sector performance here today as we got into the close. It is a mixed day by and large. 5, 10, 13 are in the red, 12 are in the green. So you have an S&P 500 that's up by 0.02. It's basically a clean split between winners and losers. Top performer today, Telecom, XTL. That's up 1.44%. You have the banks that are performing well as well. Too many wells. KBE, KRE are the best of the bank bunch. Otherwise, some rate-sensitive items like home builders were higher. Although, Ilya, today's economic data that came out, the home data was pretty god-awful, which, as someone who has a very particular pet peeve about housing and wants to see more of it built, basically wherever it can be built, building permits are down by 2% from 1.43 million to 1.39 million. Housing starts are off from 1.39 million to 1.25 million. That's a 9.8% decrease month over month.
Yeah.
That's horrible. Okay, but we have home builders rallying today. What's happening with U.S. housing right now? I saw a report this week that there are 5 times as many sellers right now in the market as buyers, a level with which we have not seen since the global financial crisis.
Well, I mean, obviously, we've talked at very extensive length for months and months and months about what the 2022 rate hike cycle did to the housing market, which was basically lock it up for both sellers and buyers. It locked it up for sellers because if you have locked in a mortgage rate somewhere near the national average of 4-ish% or lower, 3.5 to 4 or so, then why in the world would you be cavalier about refinancing at rates twice and 3 times what you may have locked in as your cost of money? So sellers haven't been enthusiastic about selling. That, of course, has kept inventories very, very low because U.S. housing supply is about 4 to 1 existing homes versus new. And we can have a tremendous conversation about all the many ills that can be addressed if we built more housing. But that aside, if you consider for the home builders calculus here, obviously mortgage rates have unclenched a little, and people have kind of acclimated to where they've been hovering recently, and so more people are selling, more supply is coming on, the prices will adjust eventually. Housing markets are notoriously very, very slow, and the price adjustment has kind of already started. So now, if you're looking at the home builders, on average, it takes about a year, about 12 months, to complete a single housing unit. So if you're a home builder and you say, okay, well, whatever's happening here, we probably get a surge of interest from buyers, and we're going to have inventory for that in about a year's time. So, okay, let's go build it. And if the market is looking at that and that's what they're anticipating, then what we see in ITB starts to kind of make sense. Because the markets go, okay, well, it's not like we're at the end of a price adjustment in housing. We're in the beginning stages, and it takes a long time. So for home builders to get ready for what buyers will want to do once they notice, they should be starting to get inventory together right about here.
Yeah, the housing story is not really a national housing story right now. This comes from Resi Club, Lance Lambert. It's using the Zillow Home Value Index through May 2025, which was published earlier this month. Glenn, you and I, people are feeling the squeeze up here still. House prices keep going up in the New York and Chicago metro areas. In fact, in my area, quite dramatically, which I'm not shocked about. My wife works in real estate. Pre-pandemic, May 2019, there were 6,400 active listings in Westchester County, just north of New York City. Currently, there are about 1,600 for this time of the year, which is really odd because everyone puts their homes up for sale in the spring, so they move during the summer and their kids can start September, the new school year. Everyone's settled in, right? So you can see in New York, housing inventory is just non-existent, so prices keep going up. It's going up in Chicago. It's all the places that really built up a lot. Feels like an echo of the financial crisis, Ilya. Las Vegas, Phoenix, Austin, Portland.
Yeah.
Parts of Los Angeles, parts of San Francisco. Right? So look at lower Florida, southern Florida. Anyway, it's not a one-size-fits-all, and that's what's so interesting about how the Fed proceeds here, because unlike in 2007, 2008, where it was the opposite of a rising tide lifts all boats, it was a falling tide sinks all boats. Everything came down, right? This time, it's not like that. It's the areas that saw the significant overbuild post-pandemic. Those are the ones that are getting hit hardest. This seems like it's just going to go on. You said that the bill is going to come due at some point down the line once the rate hike cycle started. It feels like it's coming due for large portions of the country in the areas where you have the most significant housing market activity.
Yeah, it's starting.
Well, why are Austin home prices falling so much? Why are rental prices falling so much? Because they built so much supply. So here in New York, in Chicago, Glenn, got a very different calculus. There was no overbuild. So where's the excess supply to get rid of? Just doesn't exist right now.
Or build. Never mind overbuild. Just build.
I would like to say that my town is doing a great job on this. They've just approved a lot more housing, and 100 new units are coming into town. Taking the steps. After when I moved here, up until at some point of October last year, only 2 units had been permitted in town in the 2.5 years since I moved back home. So things are changing. Things are changing.
Has changed as well. Our new mayor, Daniel Lurie, has been really pushing this subject, and frankly, his predecessor, London Breed, likewise. There's been a consensus that's emerged that the way you bring down housing costs is gasp, shock, build more supply, because more abundant things cost less. It's an incredible realization, but here we are.
Impressive.
Better late than never, I suppose. And so we're starting to see that here as well. The tide is shifting.
And you brought up one interesting point, Ilya, that you don't think mortgage rates have all that much to do with it now, just because a function of time, because it wasn't expected for a couple years, and now it's looking like the new normal. So change in that regard
they've come down off the high highs.
Mm-hmm. But I'm saying there doesn't necessarily have to be such a dramatic spark there anymore. It lies in other. Okay, interesting.
Yeah, I mean, I think you have to remember how slowly the housing market evolves. So if we consider the sort of the extreme example, stocks bottomed by March of 2009. Housing wouldn't bottom by late 2011, early 2012. It takes a long, long, long time to clear the housing market. And it is frothy here by any stretch of the imagination. So we've had mortgage rates come in. I mean, obviously, they're a little bit lower. The Fed cut rates by 100 basis points last year. It's not surprising. They're expecting to keep cutting. We're quibbling as market participants about 25 basis points here or there. But from a mortgage rates perspective, rates are going to be lower, and you've had the benefit of time. So if they're settling a little bit higher than they were, or than really they would have if the Fed kept cutting. There is sort of the dual thing of we've seen mortgage rates higher in the past 2 years, and they're sort of anchoring in a way that people are getting acclimated to seeing. And we're seeing that, I think, in relatively equal measure, get some of these sellers off the fence.
You can see it's a total tale of two cities. Real estate isn't created equally. For example, the Schwab REIT ETF, the Real Estate Investment Trust ETF, it's been chopping around sideways here for the past few weeks, whereas the home builders themselves, they've kind of keeled back over and started rolling back over again. I'm thinking about this just for myself from like a personal, a little bit, not necessarily a trade, but like a longer term portfolio construction perspective. Housing is historically one of the best places to hide if you're going through a period of inflation. Housing that's built, in fact, not housing that needs to be built. And so these real estate investment trusts, they can get very regional specific. I can go and find a REIT that is just about New York City. I can find a REIT that's just for Nashville, or a Southern Sunbelt REIT, right? So where you choose matters. And that's why I bring up those charts, because as I think about some of the allocation for housing plays, the home builders don't look like they're getting any love right now. And in this environment where labor supply is in question, where the tariffs for the supplies for aluminum, for copper, like all this is in question, and mortgage rates are near 7%, what are the home builders going to do right now? So I would think that if I want to have a housing play on the board, housing that's already existing, party that's already built, that would probably be the one to look at instead, as opposed to the home builders. Unfortunately, that's just where we are right now in the cycle. I don't see it getting better. You can see JRE, the Janus Real Estate Investment Trust ETF. This too, similar pattern. This looks like a big, all sorts of a flag to me, Ilya. I see everything as a bull flag, though, given my my delusions of being a bull. So,
if it's a bear market, then it's sideways consolidation. If it's a bull market, then it's a flag.
Yes. In stocks,
easy
yes.
Playbook.
Got it.
Could do this all day.
Yes. Yeah, right. Yeah.
Show me another
Captain
chart.
America trade. Okay, so more consolidation here, Ilya. We haven't touched on metals yet. Actually, Glenn, let's go to you first. If we're talking about the potential dollar bottoming, it is worth discussing the positioning in gold. In that same global fund manager survey that showed fund managers are the most bearish on the US dollar since January 2005, long gold is the second most popular, is the most popular trade on the board right now. It's long gold, long Mag 7, short USD. And so if the dollar is going to rebound, these dollar-denominated assets probably have a little bit more of a difficult time rallying. What's your view on gold, on silver? Do you see a difference between the two of them? How do you approach these markets as a more of an FX person, considering it is a dollar-denominated instrument?
Yeah, I think it's been quite a run. And so on the backdrop of a Fed announcement like this and seeing the knee-jerk reaction here, and especially in cryptocurrencies, it's coming front of mind again that, a high interest rate environment, really not good for crypto. And so in my mind, you could argue that even though it might be a crowded trade, all these long gold positions, not really any indication that anyone needs to, mass liquidate and go somewhere else. I mean, you still have all the fundamental storylines behind why you'd want to keep this on. And so it's hard for me to find momentum to the downside in this market unless something really falls apart. And you start to see kind of an unwind, because I feel like there's definitely, given how this asset can be leveraged, there's definitely an unwind risk here, but also very hard to make the case that this could keep running. So, the market structure over the past now over a month, really speaking to, we have settled in here. It isn't like we're in uncharted territory anymore, and that 3,400 is a ridiculous price. And so a sideways market here isn't ridiculous to expect. That's how I'm treating it. Metals in general, I feel like you have to have a lot of conviction to play them, and it's hard. It's been hard at these levels, and you've gotten an opportunity in something like silver or platinum to play the catch-up game. Those ratios definitely have been interesting, but other than that, not too sure. What are you guys thinking?
Hey, platinum's been wild. Westwater pointed this out to me today. I saw that it was doing really well this year because it's up like 49%, or 46% right now. Actually, I want to just double check that. I don't want to. This is not the forum to spread fake news. There's other forums for us to spread fake
Vecchio
news.
said.
Yeah, right.
What Chris said.
Dangerous. 46.18% higher year to date for platinum, but on a 3-month basis, it's up 29.99% this quarter.
Yeah.
So a lot of these miners have had a really, really, really good run, which gold, for what it's worth, it wasn't really down that much today. Then it flips and now is off by 0.64%, dips back below 3,400. Some of these gold miners right now, perhaps bad news for one Victor Jones, who I'll be speaking with later today on The Price of Truth. These look like they just ran into significant highs as gold looks like it's having trouble rallying. The dollar looks like it's bottoming. And now the miners are up at levels where we've previously had significant resistance and we're failing around them. Maybe that's the short-term play here, right? Why do you want to hold on to the miners if gold's going down, if silver's going down? You really don't. It's a high beta thing.
I wouldn't go so far as to say silver is going down or gold is going down. I would say both appear to be consolidating. Silver has a breakout here through the range around 36 or so, and it's holding that very firmly here. In fact, on the test today, after yesterday's rally, you're kind of narrowly holding yesterday's resistance as support. So this does not look like anything that's rolling over. The situation in gold is not very different in the sense that while gold is relatively more staid here than silver, it is still in a very well-defined up move. Even sort of the most recent up move, if we look at just the low from mid-May, you're holding former resistance as support here. Again, now you are starting to test a little bit deeper under it here today, not dissimilar from some of the deeper testing higher in the dollar, but just like that testing higher in the dollar, I would argue hasn't produced a conclusive breakout. Neither has the testing in gold. So I think at this point, it's tempting to want to draw a narrative here, but I don't know that you have one yet. I think so far you still have a similar set of circumstances, which is the trend is up. Nothing is telling you that it's turned. It does make sense, certainly, to be on the lookout for a turn because you're at very significant barriers. I mean, obviously, 3,500 is a very key line in the sand here for gold, which makes it all the more logical that the market is stalling here, but also possible that it ultimately does more than that. So, as with the dollar, I don't see a reason to get long. I don't see a reason to get short gold, but I do see a reason to be very, very vigilant about making those adjustments because they really could be here. They're just not confirmed in my mind. So I'm still long gold. I'm still short dollars, but my trigger finger is itchy, and I might very quickly flip the other way.
So no metals, no metals catch-up play for you. In my mind, that's been the narrative in recent weeks. Is all these other metals exploding? Has that run its course?
I don't know. I'm of the mindset that there could still be catch up towards gold, right? Because I mean, look what's happened at platinum here. Platinum's gone. It's unfortunate. I guess I can do this. Platinum's gone absolutely nuts. XPT USD. We'll just.
It does have a tendency to do that every now and again,
right? This is
every now and again. Platinum just goes completely haywire. There we go.
Right, you're talking about this huge. Let's get the seasonality off there. This has been a huge advance over the past few weeks. We were below $900 an ounce, now above $1,300 an ounce. But that's the catch-up play here, where everyone is saying, okay, gold's run up. It's too expensive for me to buy gold at these levels. I'll buy other hard assets. I'll buy the other things that I can get my hands on that have tangible value as opposed to being digital ones and zeros. Which I suppose it should be the last thing we talk about today. We briefly touched on coin earlier during last call. It had a really nice performance today as the Senate passes the Genius Act, 16.3% higher here, outlines regulations around stable coins, which has been a promise of the Trump administration going back to the campaign. So promises made, promises kept, I suppose. Interestingly enough, as this passes, right, what's getting hit the hardest? Visa. Visa's getting hit pretty hard. MasterCard is getting hit pretty hard. What's Amex? Why am I forgetting Amex's stock ticker right now? Someone throw me a bone. Amex stock ticker.
Isn't it
AXP? Yeah. Okay. Why am I thinking Amex? It's totally lost my mind there. Amex different group. Amex is a different group here because, well, it's a different client base. Stablecoins really impact everything else. Stablecoins are really more about what happens with lower income consumers. It's one of the concerns that actually around Walmart right now. Walmart's announced intention to have its own stablecoin come out, and it's seen as competition for potentially, regional or community banks, for some credit unions. But you see the stablecoin news passed today, or stablecoin legislation passed today, and Visa and MasterCard's are the one that are hit the hardest. So why am I reading this out? Ilya, we talked Bitcoin briefly on last call. So Glenn, we haven't seen anything in Bitcoin here today as a result of this legislation passing, but it is, again, a dollar-denominated asset. So if the dollar is going to bottom, then Bitcoin may struggle here some. What's your take on the crypto market these days?
Yeah, I mean, I touched on it before. I think around Fed announcements, I don't know why it feels like there is just more of the sentiment around, higher rates. When we really see a bullish cycle in crypto, it is in a low rate environment. And so I think that may be hampering things today. Definitely hasn't gotten any sort of safe haven demand around these events as an uncorrelated asset. I would have expected this good news to be good news for Bitcoin, but again, it's so early in my mind, especially around. I think it's a very simple math equation to say stablecoin approved directly impacts Visa, directly impacts MasterCard. But I am a little bit surprised because none of this has actually played out yet. And so I think it's very early on, and you don't necessarily know who the winners will be. This move in anticipation that stablecoins will crowd out those companies, but I think there's still room for everyone to adjust, and you don't know from a corporate level who will come out ahead as a result of this technological advancement.
Oh yeah, I'm still real bullish. I know I flashed this chart up earlier on last call with all these Fibonacci lines drawn. I know I can't help myself sometimes, but tactically, this looks like a really interesting trade if we're able to punch through 110. Where you've had this just basically 70, we'll call it 74 up to 110 range since November. It's been a 6-month trading range. The extension
got nowhere for 5 weeks here at the top of this thing.
But if we start to get moving, the measured move is up to over 135,000, which is why I'm so fascinated with what's happening in this consolidation, because there is that little voice in my head that says, We just had a rally off of some
Ooh,
lows.
is it a bull flag, or is it a triangle?
Like, what's going on
I
up
don't know.
here?
Yeah,
Is that continuation? Bottom left to top right?
we'll see.
Certainly looks like it.
I think I wouldn't be surprised if as psychological as it sounds, the 100,000 level to me right now is really interesting. In a bullish environment, I still wouldn't be surprised if we saw it flash there. I mean, the inclination is if it goes through that, then maybe we enter a different environment. But I still think from a unique price point perspective, I agree with you that we could see anything from 100,000 to 110 and nothing fundamentally changing. That's just the way it's been moving with so many other asset classes at the front of the picture. So
I've said this before. Perhaps the chat wants to chime in here too. Does it feel different this time? I just do not see the people cheerleading crypto in the same manner with which they did in the fall, winter of last year. Right? I'm not seeing the obnoxious videos of people on their boats in Miami. I'm not seeing people at clubs. I'm not seeing ridiculous fundraising rounds. This is the quietest rally in crypto so far.
that's because, you know, all the smart people that may or may not be myself are trying to play Ethereum, and that is not near its highs. Those unnamed traders couldn't go to the club or get a yacht
Okay.
based on this price action. So, Chris, maybe they just don't have it this time.
That's true. I mean, whereas Bitcoin is sitting right just below all-time highs, we're not quite at the halfway mark, but, at near $2,500 ETH, you're still well a ways away from $4,200 an ounce.
Yeah.
And the fall, which you called out before. I mean, that a remarkable run.
It certainly seems
here a run as well, but definitely more consolidation and not remotely to the levels we saw 6 months ago.
No. It sort of seems like the idea that the rising tide lifts all boats in crypto is out the window as the asset class matures. I suppose that's good news, but because it tells you the market is getting deeper and more liquid and more differentiated, as opposed to just blindly hodling everything. But
blindly hodling on a long enough timeline has worked out, Ilya.
It has, and
I think it's 2 years now. I think if you hold Bitcoin for a minimum of 2 years, at any point in time, you've been guaranteed to make money.
Completes the cycle.
Yeah, I mean, I maintain that digital tulips will eventually turn out to be as such. And by the way, I'm quite bullish on the technology. I just don't see any reason to be bullish on the token itself.
I know you like the ideas of cars. You don't like the Model T.
Yeah. I think the grand application here is CBDCs, and
which Trump spoke about favorably today.
Yes,
by the way,
yes, and that will be the great triumph of crypto. I think it's a disruptor to the banks and the credit card companies and other kind of payment infrastructure names, not so much to currencies.
That was mentioned that the U.S. needs to beat China in the realm of digital currencies moving forward. And that when they say the U.S. needs to beat China, this isn't like our American private companies need to beat the private Chinese companies. It's the United States government needs to have control over the digital asset space before the Chinese government gains that leverage and control over the digital asset space. So
unconditional surrender.
Parentheses.
Speaking of unconditional surrender, we have done a pretty darn good job not getting too far in Israel, Iran here today. But it is worth mentioning because this is the big elephant in the room here for the next, we'll call it 25 hours and 2 minutes until the futures market opens tomorrow.
Yeah.
95.5 IVR. We gap open higher. We close a little bit lower from the open, but we are still above yesterday's closing level. We are well off the lows in part because Trump said that he was getting calls from Iran to come to visit the White House to negotiate, which the Iranian consulate for the UN came out and said that they will never grovel at the gates of the White House. And there was a whole bunch more, but I think that first sentence really captures the mood.
Yeah.
So for the sake of timing here, are there negotiators in Oman right now? Perhaps. We did have a news headline earlier today that Iranian negotiators are heading to Geneva to meet with European counterparts on Friday this week. So signs of off-ramps persisting, they still exist. If the bombs don't go off tomorrow, you probably see a little bit of a vol crush. Once the market opens up, people are relaxed. They can unload their positions that they held as a hedge. And then we get to a Friday where, all things considered, if there was no volume today with the FOMC ahead of a holiday, of expiration, OPEX around the corner, Friday might be a pretty dead day too. So position management, maintenance, that's the plan.
Spot FX still open tomorrow too, though. So if you're looking to monitor something.
Is where I wanted to end here, Glenn, which is perfect for having you on, because spot FX markets, unlike even the currency futures, they will remain open. And so you can look to things like dollar yen or Aussie yen or the euro to kind of interpolate how equities or bonds may be behaving, broadly speaking. Because if Japanese yields are up, but the dollar yen rate's trading higher, then what does that mean about U.S. treasuries in the futures market? They're probably going to open up weaker, higher yields, right? In any event, watch the market open tomorrow, 6 p.m. Eastern, 5 Central, of course. I'll be back later today for the Price of Truth with Victor in about an hour's time. Ilya will be back right after this for Macro Money, so stick around. I want to thank Glenn Freiberger for coming back on again here, joining us in Overtime.
Thank you, guys.
We'll see you again soon. So for Glenn and Ilya, I've been Chris. Good luck trading. Catch you on the other side of a quick break. You're watching Tasty Live.
Well, the Fed has come and gone, and doesn't look like we're very much wiser for it. No major changes here as expected, not only for the Fed's overall stance on policy, that was very widely expected to turn up a goose egg, but the situation for the forecasting that the Fed offered pretty much as you might suspect, and as we discussed on the show here yesterday. But some interesting things showing up in the expectations, and of course, a very interesting path forward now that this is out of the way. This is Macro Money. I'm Ilya Spivak, head of Global Macro here on Tasty Live. And we are going to go through all of this here, taking a look at what the Fed did, how that fits into the overall story for investors here, and what is on the menu next. So first, just to look at how the day finishes here for financial markets. It is quiet, to say the least. Stocks ultimately go nowhere, neither do rates. The situation for gold is a little bit spicier. It is a little bit lower here alongside crude oil, so perhaps a little bit of a moderating geopolitical take here emerging in markets. But the dollar, steady. Even Bitcoin hasn't gone very far. So the situation fairly stayed. Now, of course, we do have a U.S. market holiday tomorrow, and the closure of the futures markets here is through a 24-hour period, basically, from here until things reopen in the PM Thursday U.S., Friday a.m. In GMT terms after the holiday. But of course, global markets remain open. So we'll see what happens here in the wake of this Fed announcement for how it is onboarded in Asia Pacific markets, and then, of course, in Europe. That's not necessarily going to move U.S. assets because they will be closed, but currency markets will be on the move. So perhaps we'll get a sense from the likes of the euro and the yen what all of it might still mean. Looking at the statement from the Fed, very little has changed here. But what is interesting is this little bit in the second paragraph where it says uncertainty about the economic outlook has diminished but remains elevated. Anybody that might look at the S&P 500 since the lows of Liberation Day in early April might agree that indeed uncertainty has diminished. In fact, we see that show up in survey data as well. The PMIs have slightly improved. The story in consumer confidence, as we noted yesterday, has very clearly improved looking at the latest University of Michigan numbers. So indeed, worries about the uncertain economic outlook have somewhat eased, but the overall uncertainty still remains and still is significant. So very much in line with what the Fed has outlined here. What's interesting is also that they strike the bit about risks of higher unemployment and higher inflation rising, suggesting that that is a backward-looking statement as of May. But of course, when you look at the summary of economic projections here from the Fed, you do see that sort of a tilt. And of course, as we discussed yesterday, we anticipated as much, because in May, the Fed said exactly this, that it has now taken out. And so you have from March, the adjustment in projections giving you lower economic growth from 1.7 to 1.4 for this year, from 1.8 to 1.6. Next year, we can see right alongside that unemployment marked up versus March, and inflation marked up as well. So this seems to suggest that things haven't become worse in the Fed's thinking between May and June, but they have become more so concerning between March and June. Because, of course, in May, there was no update of the summary of economic projections here. So for inflation, higher inflation across the board, across the entire 3-year view here, both headline and core. But perhaps the most interesting part of this story, the part that we didn't necessarily anticipate, because, of course, all of these changes were very clearly marked, if not necessarily in their magnitude, then certainly in their direction, in what the Fed has been saying, both in the policy statement in May as well as the minutes from that meeting that came out sometime later. This is a little bit different. What we see is that for 2026 and for 2027, the stock of rate cuts has significantly diminished. And what we now see is that while we, in March, we're still looking at 100 basis points between this year and next, and then further easing, another 25 basis point cut in 2027, we now see the timeline elongate. So we still get the 50 basis points this year from 4.4 to 3.9. But then for next year, it's 3.6, so one cut instead of two. And then you get to 3.4, one more cut in 2027. So you get to 3.4 as you were anticipating, but you get there later. Get there a year later, as a matter of fact. And so the Fed here is signaling that actually after this year, scope for rate cuts is diminished, not increased, which is certainly quite a bit different than what you find in the market's own expectations for what is likely going to occur here. And actually marks what is probably the most interesting sort of upshot from the Fed announcement here writ large. So you have here the path for this year, and not surprising, it hasn't really changed very much. We have standstill through July. You start to kind of flirt with the idea of a cut in September, October, and then another one in December, and that's how you see the markets basically lining up with that 50 basis point forecast that the Fed is giving us. But when you consider what's going on for next year, the easing is actually expected to get more intense, not less. So whereas the markets are now at 100 basis points, the Fed has gone down to 75 over this same time period. And this now makes for a very interesting dichotomy. Because if the market is in fact going to say that, look, the Fed is worried about all of this uncertainty, they're worried that the cutting of rates now would be premature in the event that tariffs, as they work their way into inflation, do end up inflationary, and growth is impacted negatively. And through all that, the Fed has competing objectives, so it doesn't want to jump the gun. It really wants to make sure it's doing the right thing and focusing in the right area of the economy, whether it's focusing on inflation or focusing on growth, and justifying the stance, though, by saying, well, look, inflation is 2.4%, looking at the latest CPI numbers, and the unemployment rate is at 4.2%, which by historical standards is very low. So inflation is within a hair of target. Unemployment is very healthy, historically speaking. And so why would the Fed want to try to reconcile what the tariffs are going to do before they have evidence? Why would they guess? What is the impetus for them to do that? Why not just say thank you for the relatively well-positioned economy, and as they have, invoke that you have the benefit of time to wait for things to really tell you which way to jump without a need to rush it? Well, the markets don't have that ambiguity. They don't share that kind of confusion. They actually seem to have decided that they know which side of the coin this is going to land. And we've talked about this before, but we'll bring it up here again. This is the look at inflation expectations baked into the bond market, which we can see from mid-February were falling with stocks as the rollout of the White House's tariff efforts stoked concerns about economic growth and those efforts' consequences, negative as the markets judge them to be. And you see that come April, when you get that kind of back and forth, you get Liberation Day and then shortly thereafter a 90-day pause on its worst, most economically damaging aspects. You get a very rapid recovery in sentiment. This is, of course, that diminishing uncertainty that the Fed is talking about. This is the S&P, and it's going higher here very clearly. But inflation expectations don't follow suit. They diverge. They are saying that having fallen here, this is the place to be. And that, of course, suggests that there isn't a great inflation scare downwind, and that the markets are much more concerned with the growth implications of what's going on and expect those implications to be more powerful than any read-through into inflation, because the demand destruction from the slowdown that the markets are envisioning will overwhelm inflationary forces from higher tariff rates and actually result in inflation being net lower. And that's the story that we've seen here really since mid-May, evolving after this larger move since the beginning of the year. So it's no surprise here that the markets are at 100 basis points, even as the Fed goes to 75. And so what this does is it opens up a very interesting sort of possibility for a revaluation in markets where they become convinced that the Fed is behind the curve and move forward with pricing out more aggressive rate cuts downwind, expecting the Fed is going to have to play catch-up. A similar outcome last year gave us a dramatic rally in the bonds from April into September and a parallel sell-off in the dollar, too. Now, beyond the Fed here, which was limited to this little bit in terms of its kind of practical deviation from expectations, we have a monetary policy announcement coming up from the Bank of England. No changes expected here. We can see rates seen steady in June, but the markets do anticipate that the bias will remain dovish. You can see here there's still 44 basis points on the menu for rate cuts this year and another 27 basis points next year. So the markets are very much still looking for the Bank of England to be cutting. In fact, you can see here when you have a cut on the menu somewhere by September and then a further one in December. So if we take a look at the pricing here, it's not impossible that we may go as soon as August, but certainly by September. And so that's really the market moving component here. We just had UK CPI data. It came in a little bit from the 15-month high, largely as expected. And if we look at the breakdown, a nice swing lower in transport inflation, most things still stuck in this energy component, but as we have talked about before, this is mainly a change in vehicle excise taxes, not necessarily a lasting sort of thing. This is more a function of policy, not of economic dynamics. Probably the biggest bit there is food and the increase there, but of course that move really is outside the purview of what the Bank of England has agency over. It can't mandate global food prices or energy prices, and what it's dealing with then is seemingly the kind of thing where they have mostly a fiscal policy shock and just need time to work through that shock, filtering out of the data. That likely is how you end up with the dovish perspective in markets, because of course the growth story in the UK is pointing toward deceleration basically since the middle of last year. Things have perked up just a little bit here in May, but the economy is basically at standstill when you look at it in these S&P Global PMI terms. As ever, of course, these numbers are centered around 50, which is neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And at 50.3, you're essentially idling, with manufacturing in contraction mode and services growing by a hair. And the trend, as we can see here, has been toward increasingly slower economic activity growth. So with that in mind, that dovish bias of the Bank of England seems to make sense, even as they pause this time. So the key risk then becomes that the Bank of England decides that actually, with the surging cost of oil around conflict in the Middle East and all manner of other potential influences here, the bias might be less dovish than market pricing suggests. That maybe they have less room to think about rate cuts for the rest of this year and maybe next. And so if that's the case, if the Bank of England seems to sound a little bit less dovish, if the voting tally is a little bit more hawkish of a hold than what's anticipated, so the markets are looking for a 7-2 vote on the 9-member Monetary Policy Committee in favor of a hold. If it's, let's say, 8-1, where only one person calls for a cut rather than two, that would clash with market expectations. And against that backdrop, the British pound could have itself a little bit of an upside run. Most other markets, of course, closed, so not much to see outside of spot currency markets and, of course, local European equities. But in this environment, it's really spot British pound where you'd see kind of the meat of the impact of something like this. And then looking ahead, because we don't really have much in the way of event risk beyond that this week, first thing next week, as we come back from whatever diminishing volumes after the holiday, we get S&P Global PMI data for June, the first look there. And immediately you get a sense of a familiar divergence. So the composite index taking in both services and manufacturing for Japan, expected at standstill, just a hair above 50. For the Eurozone, standstill, just a hair above 50. For the UK, standstill, just a hair above 50. For the US, clearly stronger growth. And so once again, you have this resumption of a world where it's the US or bust as far as global economic growth is concerned. We have, of course, pointed out repeatedly that global growth is basically made up and is basically driven by three major economies: the US, the Eurozone, and China, with the US being the biggest piece. The rest of the world, the remaining 42% outside of the 58% made up of the big three, they're mainly vendors to those big three and depend on their demand to have demand of their own. So it's really those big three setting the course of where things go. And if we look at what that's meant, it is been a slowdown in global growth, really going back to the middle of last year. These are global PMI numbers here, and there's 50. So we can see manufacturing is back in contraction mode, where it's been flirting for quite a while. But the overall story here, the composite index in the blue line here, it's been steadily decelerating now for almost a year. And so we're at this point here where in May there was a little bit of a pop, but off a 17-month low here. So the story is of weakening overall, and the disparity, the duality of what the expectations suggest has really been how that's occurred. So we can see here the U.S. economy over that same period has been relatively strong, but the other drivers, both China and the Eurozone, have stagnated toward standstill at best, and in the case of the Eurozone, a mild recession at the end of last year and going into this one. But both are now basically standing still. And the U.S. is outperforming again after diverging down here, but that may not continue. And if it doesn't, then there's really a single point of failure here. There is no safety net. If the U.S. slows, then so does the global economy, and then global recession risk returns, which makes these PMI numbers early next week very interesting indeed, because as it happens, U.S. economic data has increasingly disappointed relative to expectations over the past 4 weeks or so. We can see that the City Economic Surprise Index here, the global one, is being pulled lower. The G10 one is being pulled lower. Meanwhile, the Eurozone's data is steady. And of course, in emerging markets, things are steady also. So the pull down here on the global and on the G10 readings clearly seem to be coming from weakness in the US. If that is going to foreshadow a disappointment on these PMI numbers, then global recession worries may well return in spades, even as the Fed gets an ever-widening wedge between its view and the markets, where the markets are more dovish and the Fed is less so. Not exactly the most encouraging setup for risk-taking and stock markets, of course, if this plays out as it might. That is macro money for today. As ever, we are here Monday through Thursday, taking, of course, the holiday off here on Thursday with markets closed. So this will be our last show for this week. Back to our regular schedule next week. And back on Futures Power Hour Mondays and Fridays, back with Victor Jones for The Price of Truth on Tuesdays, on with Tom and Victor for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter, and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back next week. Happy trading.
Oh, yeah, it's Wednesday, June 19th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast, give it a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And we're getting our money's worth today. More on that in just a bit. But first, let's introduce our wacky Wednesday guest. We've got the one, the only Chris Vecchio. Chris, how you doing, my friend?
Open the markets. Why are we having a holiday on Thursday? I know it's an important holiday, but come on. Open the markets.
How is this going to work? How does this work again? I forgot how it did. We shut down. Futures shut down after 5. And
supposedly,
then what happens?
Like
or futures are open, but cash is closed. Do you know
something
the
like
logistics?
Yeah, I was looking at the CME Group website today, and you know, Victor, I guess we're going to be watching some things tonight.
Yeah, I don't know if I'm looking at it. Sometimes I get caught, and I'm like, I don't know if I'm looking at a live price or if these things haven't moved in 12 hours. I'm not exactly sure. And I've just been checking my phone for no reason. Shout out to everybody watching. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile application. If you don't already have both, you should go get them. Make your life just a little bit better. But there's only one place if you want to be part of the conversation. Bing, in the middle of your screen. Did we get it? There's only one place to do that. That's on the evil Google YouTube. So head on over to Tasty Live's YouTube channel. Subscribe to the channel, and all of your thoughts will be streamed on screen, both appropriate and otherwise. Chris Vecchio.
So just, Victor, before we start.
Sure.
Futures market, regular open, trading halt at 12, resuming at 5. Central Time. So we have some things to watch tonight. Tomorrow, cash is closed, half day for futures-ish. Not half day, most of the day. But the market's effectively closed.
Yeah, that's always a weird one. When you get the half day and then you open up back at night. So weird. I mean, I don't
kind of like a Sunday. Listen, I think the market we should have 24/7 trading. That's what I think. But
we should. And the only reason we don't is because they haven't figured out how to monetize it on each and every individual trade. SPX down 3 basis points, NASDAQ down nothing. The Dow Jones down 10 basis points, and the Russell, the little engine that could, up 0.5%. Vol got crushed a bit today, I suppose, if I could say it, down $1.50, but still above 20. Fixed futures still at 20.5. Chris Vecchio, what say you, man? Still hanging around 60.33.
You know, I took off Thursday, Friday last week. And when I left work, the S&P was like, 6,000, 60.50. And I came back on Monday and it was 6,000, 60.50. So I assume it was a pretty quiet few days, which is not atypical because running up into the Fed meeting, things are pretty quiet. And it's been a pretty quiet week, right? Everything's priced in. Isn't that what the market's telling us?
Mm-hmm.
So
it would have been, I think for most people, it would have been better to just fall asleep and come back a couple of days later.
That's not what I did. No, I unfortunately, I'm one of those meme people, Victor. When you see those, memes of folks who are monitoring the situation, Trung Phane had a good one out today. It was like, this is what someone's eyes will look like who's drinking alcohol and different drugs, and it goes all the way down, monitoring the situation, and their eyes are just bloodshot red. But that actually overlaps very neatly with my natural sleep cycle. So the fact that I'm up watching my Mets get their teeth kicked in for a fourth straight game. I went to 2 of those games they lost, and this is their longest losing streak of the season. So is it my fault? Maybe. But I would point out that this is very interesting from a market perspective. We can talk about the philosophical and the human reality of this, which is obviously terrible. But the fact that oil vol is so high and oil has exploded to the upside in such a significant manner, way more than it did in the April or October 2024 episodes of the missile salvos being exchanged between Israel and Iran, yet stocks are reacting the least concerned throughout this entire episode. April was the biggest drawdown. It took us a month to return to where we were before the Israel-Iran tensions. October was like 6 days. We took one trading session, right? We're down Friday. Monday, we basically get back to where we were on Wednesday's close before I went on my little 2-day trip away. Stocks just don't care about this. Maybe it's because, for what it's worth, the earnings profile of our business with Iran for S&P 500 companies is pretty low. Nil, in fact. Also, are we going to really see global oil supplies disrupted? Is that a problem for the U.S. this time around, Victor? 10 years ago, U.S. and Western Europe were the right, and that's a huge part of the equation here. You know, Iran threatening to close off the Strait of Hormuz mattered 10 or 15 years ago because Western Europe and the United States were the biggest purchasers of Iranian oil. And these days, Iranian oil basically goes to one place, China. So shut down the Strait of Hormuz, you're hurting China. China doesn't want to see it shut down. So Iran's not going to sabotage the Strait of Hormuz anytime soon. It doesn't impact the people who are waging this war against them. I think this is a very interesting exercise in seeing whether or not the macro matters. Supply chain disruptions are obviously the thing that we're keeping our eye on because an immense amount of natural gas fuel moves its way through the Strait of Hormuz and then ultimately into the Persian Gulf. But right now, it's a good story. In terms of market impact outside of oil, you would not know it's occurring whatsoever.
Some part of me wonders if we just have to get to the other side of expiration here, because, like, I mean, either people got so burned in April, like they're so out of position, they're so jockeying for performance into this end of the month, end of the quarter. Either that's what's happening here, or none of this. I can't imagine none of this matters. Like, I looked at the S&P and I'm like, bro, that is, I mean, they are screaming at you what they think is coming. And I think if you believe them, see, the problem with the Federal Reserve is, like, they've said so much shit that's been so far off that, like, when they start to put SEPs in front of you that effectively say growth is slowing, we can't maintain inflation's it's out of control, and our Fed funds rate is going to be meaningless to do anything about it for a few years. How do you not flinch at that? And I get that 40 points is a move. We did move 40 points, first up and then down, but there's an accumulation of negative news here, and I just don't understand it, Chris. I don't understand the price action yet.
It's just another brick in the wall of worry, Mr. Jones. And that's what a good bull market needs. Right? I mean, look at the VIX term structure over the past 2 weeks from June 4th to today. The spread between the front month and the back month contracts, 6 points or so. And now we're sitting closer to 3. So it's not like you've seen a big bump in vol. Right? It's just that the curve is flattened out. Collectively, the market has been telling us that the past 2 weeks is basically digestion, and we're handling this geopolitical risk fairly well, all things considered. Right? You're not seeing gold shoot up to 3,800 and stocks dump 10% and, just an immense amount of volatility in treasuries, but no real direction because, hey, is it growth going down or inflation going up or safe haven demand or, right? This has been exceptionally orderly. There was a part of me last week when I woke up to the news because Thursday morning's my daughter's graduation. And I say, oh my God, I can't believe I'm taking off of work today. But what a good day, right? Like, or 2 weeks ago for Elon Musk and Trump. And then last week, like I'm out Thursday, Friday for just my vacation. It's like, oh my gosh, I'm missing this again. And yet the prudent thing to do on the other side of it was just to ignore it. In both occasions, if you didn't get panicked at a Tesla or you just bought the dip and said it was nonsense, you were fine. If you bought the dip in equities after the news broke, you were fine. I don't know that the lesson here is that nothing matters. And I know a lot of people want to take the nihilistic path and say, well, World War III is coming and stocks are still rallying. One, if you ever see a scare in the market because of World War III, you must buy the dip. It's like a Pascal's wager kind of thing, right? You know Pascal's wager, Victor, the mathematician. Why do you believe in God? Right? You do your little pundit square, right? You believe in God and there's heaven. Well, a lifetime of eternity in heaven. If you believe in God and there's no heaven, then you just spend an hour or two a week praying, going to church, whatever. If you don't believe in God and there's a heaven, it's a lifetime in hell. So like the reasoning works out that you should roll the dice and be a religious person. And I don't want to say it's like kind of the same thing here, but kind of seems like it's a Pascal's wager situation. So you were talking about the Fed, though, and with respect to the Federal Reserve, they could have just thrown up their hands, given us one of those emojis today.
It's the same thing as last one. It's so embarrassing.
It's more so than last one, right?
They
tell us in their policy statement that the negative impact to growth isn't necessarily there, and uncertainty around growth has declined since the last meeting. But then when they give you these forecasts, everything is getting hit, and then the expectation bands are widening out.
Yeah.
Powell said twice today, at least, that that no FOMC member is tied to their rate path. These aren't even strong convictions held loosely. These are weak convictions held loosely right now. So all of this can change on a dime. You get a few more, you see further labor market deterioration, a few more inflation reports miss. Powell probably is going to act, but it could really go one way or the other right now.
Yeah, I feel like we're at the wrong price. Some part of me thinks like elevated vol right now, 2021, at this 60-30 makes sense because it's not the right price. But we should be a ways away from here. But I too can't figure out. Do you unclench to the upside and this is a funny money 7,000 market, or do we unclench to the downside and go retest like 5,200 and things are still real and we still got a chance? The world's not. We're not going to live in some Terminator hell. All right. So outside the E-mini S&P,
will, just not this week.
What do you make of the Russell outperforming? Is it like I keep making fun of this trade because you'll get like I say Russell's here for a good time, not a long time. Every time it outperforms, maybe you get at best a 3 to 5 day streak, and then it falls apart. Is there ever going to be a time when you can bet value over Mag 7s?
Mag 7's a real credit trade. We've referenced this on air the past few days, but Bank of America Fund Manager Survey came out. Top 3 credit trades right now: long gold, long Mag 7, short US dollar. Okay. Incidentally, 4 of the 7 Mag 7 names are not green year to date. So it's a crowded trade, but it feels like it's legacy crowded trade. A lot of people have just been holding on because the past 2 years, what was the best? Right?
Maybe.
Mag 7.
They just gave you a 35% discount over scaries, though. So even though it feels like we haven't moved that much on a few of these, in the last 2 months, these things have given you 40%. The biggest names in the market gave you like a 30 to 40% return just to get back to unched.
Just to get back to unched, right? So, but I feel like it's people riding it out because if you look at the fund manager survey, it's been in favor around the same levels as the past several months. So regardless, though, could there be some catch up for the 7 names are down? Sure, that's certainly possible. Is it crowded, though? Yeah, it is crowded. But you say that this could be a funny money market. Why wouldn't it be? Haven't we seen that movie?
Maybe then I'll fade away and not have to face the facts. It's not easy seagull turn a deeper blue. I could not foresee this thing happening to you. If I look hard enough into the setting sun, my love will laugh with me before the morning comes. I see a red door and I want it painted black. No colors anymore, I want them to turn black. I see the girls walk by dressed in their summer clothes. I have to turn my head until my darkness goes. I wanna see a painted, painted black, black as night, black as coal. I wanna see the sun blotted out from the sky. I wanna see a painted, 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 painted black. Yeah. What a drag it is getting old. Kids are different today. I hear every mother say, mother needs something today to calm her down. And though she's not really ill, there's a little yellow pill. She goes running for the shelter of her mother's little helper, and it helps her on her way, gets her through her busy day. Things are different today. I hear every mother say, cooking fresh food for her husband's just a drag. So she buys an instant cake and she buys a frozen steak and goes running for the shelter of her mother's little helper, and to help her on her way, get her through her busy day. Doctor, please, some more of these outside the door. She took for more. What a drag it is getting old. Men just aren't the same today. I hear every mother say they just don't appreciate that you get tired. They're so hard to satisfy. You can tranquilize your man. So go running for the shelter of a mother's little helper, and for help you through the night, help to minimize your flight. Doctor, please, some more of these outside the door. She took for more. What a drag it is getting old. Life's just much too hard today. I hear every mother say the pursuit of happiness just seems a bore. And if you take more of those, you will get an overdose. No more running for the shelter at that stupid girl. The way she talks about someone else that she don't even know herself. She's the sickest thing in this world. Well, look at that stupid girl. Well, I'm sick and tired, and I really have my doubts. I've tried and tried, but it never really works out. Like a lady in waiting to a virgin queen. Look at that stupid girl. She bitches back things that you've never seen. Look at that stupid girl. It doesn't matter if she dyes her hair or the color of the shoes she wears. She's the worst thing in this world. Well, look at that stupid girl. Like a lady in waiting to a virgin queen. Look at that stupid girl. She bitches bad things that you've never seen. Look at that stupid girl. She purrs like a pussy cat. Then she turns round and hisses back. She's the sickest thing in this world. Look at that stupid girl. My sweet Lady Jane, when I see you again, your servant am I, and will humbly remain. Just heed this plea, my love, on bended knees, my love. I pledge myself to Lady Jane. My dear Lady Anne, I've done what I can. I must take my leave, for promised I am. This play is run, my love. Your time has come, my love. I pledge my troth to Lady Jane. Oh, my sweet Marie, I wait at your ease. The sands have run out for your lady and me. Wedlock is nigh, my love. Her station's right, my love. Life is secure with Lady Jane. to me. The change has come. She's under my thumb. Ain't it the truth? Under my thumb is a squirmy dog who's just had her day. Under my thumb, a girl who has just changed her ways. It's down to me. Yes, it is the way she does just what she's told. Down to me, the change has come. She's under my thumb. See, it's alright. Under my thumb, Siamese cat of a girl. Under my thumb, she's the sweetest pet in the world. It's down to me. The way she talks when she's spoken to. Down to me, the change has come. She's under my thumb. Take it easy, babe. It's down to me. Oh yeah, the way she talks when she's spoken to. Down to me, the change has come. She's under my thumb. Yeah, it feels alright. Under my thumb, her eyes are just kept to herself. Under my thumb, well, I can still look at someone else. It's down to me. Oh, that's what I said. The way she talks when she's spoken to. Down to me, the change has come. She's under my thumb. Say it's alright. It's alright. Say it's alright. Easy, babe. Take it easy, babe. spending too much time away. I can't stand another day. Maybe you think I've seen the world, but I'd rather see my girl. I'm going home. 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 Boom, 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 home. Boom, 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 back home. Yes, I am. All those letters every day may be alright in their way, but I'd love to see your face when I get home in their place. I'm going home. 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 Boom, 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 home. Boom, 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 back home. Yes, I am. All right. I'm going home. 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 Boom, 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 home. Boom, 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 back home. Yes, I will. When you're 3,000 miles away, I just never sleep the same. If I packed my things right now, I could be home in 7 hours. I'm going home. 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 Boom, 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 home. Boom, 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 back home. Yes, I will. Yes, I will. I see my baby. I see my baby. I wanna see my girl. I just can't wait. 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 Yeah, yeah, yeah. I just can't wait. I see my baby. She'll make me feel alright. Baby looking for my thing. You're gonna go in the early morning. Early in the morning. Early in the morning. Gonna catch that plane. I'm gonna catch that plane. Now it won't be alone. I said, listen to me. It won't be alone. I know it won't be long, baby. It won't be alone. It won't be alone. It won't be alone. A long time since I seen my baby. Yes, it is. It's such a long time. Long time. I'm gonna see my baby one more time. I wanna see my darling, wanna make sweet, sweet love. A sweet, sweet love. A sweet, sweet love. A sweet, sweet love, your baby. In the middle of the night. Early in the morning. Early in the morning. Early in the morning. Early in the morning. Oh, midnight hour. She make me feel so good. She make me feel alright. She make me feel so good. So good. So good. Oh, when she touch my hand, that's all I got to say. 'Cause I'm gonna pack my bags. Sha-la-la, sha-la-la. Oh, come on. I wanna see you, baby. I see your face. I see your face. Your pretty smile. 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 Pretty clothes. Hear talk. Hear talk. Hear talk. Hear talk. Ooh. Hear talk. Come on. Come on. Come on. Come on. Come on. Come on. I see my baby. I'm going home. I'm going home. I'm going home. I'm gonna get out. I'm getting out. I'm getting out. Get out. Get out. Get out. Seeing your face, making love to you, baby. Yes, it makes me feel so good. Inside, inside, inside. I feel so good inside. Feel so good inside. I feel so good inside. Yeah. Come on. One more time. Touch me one more time. Touch me one more time. Touch me one more. One more. Come on, little girl. You may look sweet. You may look sweet. And I know you are. But now you are. But now you are. just lucky that I didn't have any luck towards her. Next time I make sure that the girl will be much poorer. High and dry, oh, what a way to go. Left me standing here just high and dry. High and dry, well, I'm up here with no warning. Yep. High and dry, well, I couldn't get a word in. High and dry, oh, what a way to go. Left me standing here just high and dry. Well, it's left me standing here just high and dry. Well, left me standing here just high and dry. You don't know what's going on. You've been away for far too long. You can't come back and think you are still there. You're out of touch, my baby. My phone just started, baby. I said, baby, 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 you're out of time. Well, baby, 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 you're out of time. I said, baby, 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 you're out of time. You are left out of there without a doubt. 'Cause baby, 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 you're out of time. The girl who wants to run away discovers that you had a day. It's no good you're thinking that you are still mad. You're out of touch, my baby. My poor unfaithful baby. I said, baby, 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 you're out of time. Well, baby, 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 you're out of time. I said, baby, 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 you're out of time. Yes, you are left out. Out of there without a doubt. 'Cause